check, 1, 2, mic check. Woo! No sleep for the wicked. I think I'm feeling better. I think I had like 2 months of flu. I'm not kidding. That's right. Crash, baby. You guys get it. I did try to like reset my I don't know, DNS server, all that kind of stuff. I've been working on my internet and my IP address or something like that. I don't know. Reassign a new DNS IP address, whatever the fuck that stuff is. I'm not that much of a rocket scientist here. You guys ready to get going this morning? It was crazy or not just this morning. The past few days have been like a fever dream on social media. Media fever dream. Espousing everyone's an armchair general on data. And then I shouldn't say that. Some people are armchair generals. Some people regurgitate. And then lots of people are either ignorant and claim to be smart or on the subject, or they're reporters, or they have something to sell to you. There's always like sizzle, right? Selling a steak or a story or whatever. I actually feel good this morning. The past like 2 days, 3 days, I'm feeling good. I've had 2 different versions of the flu. I've been to the doctor for both, but both have been in my life the last 2 months. And I can't. Oh, wait a minute. Ready? No. It's weird. I don't get sick, but I'm like, it's like sick in the background, worn down. And it's been brutal. It started when I started doing the holidays, like season stuff, with like Thanksgiving, Christmas, New Year's, running around with family, running around with friends, and skiing and all that other kind of stuff. And it just like took me out. And I'm just now, hold on one second here. I'm going to bring some coffee over here and get ready. It's a busy day. So I want to touch on this subject briefly here. And make sure you have read your, first of all, for this morning, make sure that you read your brief last night. If there is going to be any weakness in the market today or tomorrow, sometimes we roll at our 10:30ish. The market will seem like it's bullish, and then they'll hedge the market for these hearings. We've got a hearing today and a hearing tomorrow. We'll have those live on the show for you this morning, this afternoon, and into tomorrow. And we have a lot of other stuff going on, right? We'll discuss some of that stuff that's going on in the background. There's panic. There's rage, there's anger, there's emotions out there. Somebody I saw yesterday, like, posts, burn it all down. I saw Trump pushing some of it, and then, of course, other people picking up on it. Saw Elon getting into fights yesterday. So there's emotions running wild, and there's soap operas running wild everywhere, right? And so we'll address some of that stuff today, try to look at some of that stuff. So try to look at some of the pitfalls here the next coming days, and then into next week. And like, how do you catch a dip? How do you look to buy to go long? I find it very fascinating right now. We have this like outlook for the year where on major highs you get hedged. It's easy to do. There's expected volatility this year, so it's not that hard to just stand back and buy a dip and hang on tight, strap in your seatbelt, and ride this year out. Other than that, there's people like, you know, like they got like the fucking markers and crayons out, and they got the chalkboards out, and they're writing you a literal book as to why this or that should happen, and then they disappear. They always disappear. They always come back to rewrite the book. They tell you bear market. They mix up bear market and crash. There's just like constant nonsense, and they're all vying for your attention. And you know, we lose our money that way, don't we? Or it soothes our pain or fills our emotional needs, but it doesn't pay the fucking bills, does it? We want to be paying the bills. That's the key here, right? Pay the bills, know when to go long, know when to get out of market, know when to stand out of the way. And especially right now, how the market is with lots of retail in the market, the news-driven, policy-driven price action that's going on. It's been easy. Make volatility great again. You can ride the edges in this market here, and it's a cakewalk. As long as you're not stuck in the middle getting ground to dust, this market is easy right now. And, you know, it's funny because the commentary in this last 2-year melt-up has been, hey, Cap, I can't get long. I'm too scared. And then when I get long, I'm the last guy in. Now we're in some volatility. We've got range trading, and it shouldn't be hard. So now I hear complaints. When are we going to break out? When are we going to do this? When is that going to happen? So there's always loud voices in the background, isn't there? So let's get right into it this morning. We're going to take a look at some expectations. I want to talk a little bit too about like astroturfing, social media, that kind of thing, posting different things in different places, all that kind of craziness. As a matter of fact, this morning I'm like, I'm gonna do this whole like stock market crash thing. First time I typed in a hashtag stock market crash, in the post it just popped up trending right now or something, and I'm like, oh fuck, these guys are bared the fuck up. This whole market's bared the fuck up. Everybody, they're telling you. They're like, okay, we're gonna do tariffs on Monday, and we're gonna do these specific tariffs, and it's gonna be really bad at 1 p.m. on Monday. So, you know, it's always better when no one knows something except for the people with money, or nobody knows anything. So something is mispriced, right? Whenever we get, usually, this is fascinating about yesterday, when I walk into Fed rate decisions, both sides of the market, now you could say that that's because of spreads, but both sides are equally weighted. And yesterday it was just like max fucking puts. Just like max puts, no one in calls, market gonna crash. I haven't even looked this morning to see what it's like today. I'm assuming here that we're going up into next week. You're going to be able to catch maybe one sexy dip. You might not even be able to catch that fucking dip. And they're going to wait until next week to dump this shit, if they even do. I don't like when they're telling you this stuff. I like to see the market like exuberant and happy, and we're going to the moon, you know, and like everything is great. Like as long as you have that, and everybody's just loading the fuck up on calls. You got call gamma just stacking. We can fucking crash, but unless we get real money selling by institutions, it's tough to say that that's going to happen. And they're going to tell you in advance. Maybe it's possible. I think they're going to catch you when you're off guard, personally. So, anyways, we'll take a look at some of the technicals, the fundamentals, and all that kind of stuff. We'll put the fucking shit on with the Senate. And I hope that you can stay with us for the rest of today. Good morning to all of you out there. Hope you're all doing well. I hope none of you are like awake all night long or any of that kind of stuff, paranoid or whatever last night. Good morning to all of you out there. Good to see you all. Okay, so give me a few seconds here. This is terrible. I feel so bad on FinTwit. I got friends on FinTwit that don't know I'm doing this. They're like, dude, we're not going to crash. I'm like, I know. Earlier I posted that. And I'm like, this is all bullshit. It's just it's meant to be there to take some of the sting away from the people that are running that fucking psyop on Twitter. So take some of their shit away from them. So here we go. Let's get into it right now. Probably watching this fucking show right now. I'm not shitting you. Let's take a look at the trigger full screen. Go over here. All right. So what do we got going on here? Let's clear some of this out. Matter of fact, I think I gave you this last night, told you where I think we're going here. And we'll start this over again. We'll just start from square one. Wait a minute. Well, give me a second here. I got to check one thing. I do have to check one thing here. Got to make sure I got our Senate hearing here set up. Make sure I got the video rolling here. Give me one quick second. Watch live. Okay. I got the hearing up over here. Just want to make sure I don't miss any of this. I just want you to know that it begins in it begins here in, you know, let me switch over a little bit here. Let me see if I can switch this up. Hold on here. Can I go to like a rate decision maybe? Let's check that out. Oh, this works. I think this works. Let me give me a second here. Oh, I like having this already set up here. What is that? What is this thing? Tap center screen. Okay, we can do that. What do we got here? Monetary policy. Bam. Done. Sweet. Watch live video. All right, we're starting to rock and roll here. So we got that set up. What do we got down here? So we got this down here. We got this up here. Down below, what we're going to look at, I think we should do a triple screen. And what we'll do is go here. We'll do a triple screen. And this first screen on the left, we'll do, what should we do here? How about Dixie? We'll do the Dix. Let's do a 30-minute basis on the Dix. Look at that. The Dix getting hammered, baby. And not only is the Dix getting hammered, it's trading $1.08, 133. And it's coming down on its daily trigger. Pounding on down on its daily trigger. What's going on here? Like, why is this not showing all my stuff here? Triggers. Okay, let's do the triggers here. Cool. And we got Dixie. And then we're going to do VIX 9-day. My favorite. Love the VIX 9-day. Let's see if we can label this over here. If you never used the VIX 9-day, it's for me, it is one of my favorite like practical VIX traders. Very similar to dividing SPX versus VIX, especially like day trade and stuff, bottoms of markets and stuff like that. VIX coming up into its hourly trigger right now, being rejected on its hourly and daily trigger. Dixie getting hammered right now. And then we're going to look at, what should we do, TNX maybe? Tits and X. CBOE 10-year Treasury yield. We'll leave that down here. TNX. We'll see here, TNX. All right, so we got those three up there. I'm going to try to stretch these out a little bit so that you can see them. So you can get a nice, clear picture of Dixie now coming into support. Watch yourself here. Dix coming into a target of 108.11. That's on the 1 minute. Yep, we're good. Okay. VIX 9-day wanting to break out here as Dixie's coming into some form of support. TNX currently parked at 4.53. Oh, shoot. What did I do wrong here? Okay, hold on here. apply these intercurrents across the entire layout. Okay, cool. Sorry about that. I got some stuff to do here. I got to get this layout going for you. Dick's being bought right now on 108 in small change. Vic's getting saucy. Let's check TNX here. Four minutes until coverage begins. Let me check this. Let me do a quick check here on TNX and the top screener up here. I want to just see if it's bullish. Yeah, damn, it looks bullish. Looks like it's going to come down to like 4.449, but it's going to go up to close some gaps above at 4.619. People are like, why are you charting the TNX? But it actually does work. I was talking to a person that I mentor last night, and what? We were discussing how he looks at the whole market every night, checking currencies and metals and commodities, and then like smaller ETFs that are part of large ETFs that are part of larger ETFs, and how do you come to decisions as to where the movement of, or anticipating the movement of the market in a day or a week or a month in advance. It was a fascinating conversation. I did write it down last night. I'm going to try to post it here today or tomorrow for you. It was a great conversation, because one more thing that we don't talk about live. Okay, so we just got a couple more minutes here. I'm also going to have a news squawker on for you. I'm going to read a few things to you here this morning. Some news as it breaks. And make sure I got all this stuff set up properly here for us. Boom. We're rock and roll. Bring it right into contrast right there. We're getting there. We're almost there. This is SPY, by the way. If you're wondering what this is. Dixie being bought right now. VIX trying to break out to the upside. TNX has a little bit of down and then upside to go. Good morning, everybody. Good to see you all. You never seen me so organized before. Cheers to you all out there. Let's take a look quickly at velocity on SPOOs.
10 seconds.
Velocity looks good, man, on the hourly, and dude, the hourly velo looks great on SPY. It really does. We got a little bit of. Let's check this out here. If you're just joining us, beware that
is solid and not a source of inflationary pressures. The US economy is strong overall, and inflation is closer to 2% goal, but still somewhat elevated. We can ease policy if the labor market unexpectedly weakens or if inflation falls more quickly than expected. We can maintain policy restraint for longer if the economy remains strong and inflation does not move toward 2%. Policy is well positioned to deal with risks and uncertainties. The Fed's framework review will not include a focus on inflation target, but which will remain at 2%. And Powell says the Fed will wrap up the framework review by late summer.
Powell saying that we do not need to be in a hurry to adjust policy. Now, this is expected stuff from Powell. I expect canned ham today. That's what I wrote in the brief last night. I don't think you're going to get the fireworks that you're expecting. Maybe. There's a bunch of questions for him today and tomorrow. We'll review some of those questions that will likely be posed to him or pushed on him. But he is very non-confrontational publicly. Sometimes you get a little bit of J. Powell Bear, but in truth, if you get Jerome Powell, it's usually like canned responses, and he will schedule to address specific issues that need to be addressed or required to be addressed. Sometimes you'll get there was a confrontational J. Powell years ago where he would pull shit in Senate hearings, but he says he's not that guy anymore. So I'm not expecting that today. Maybe we do get some of those fireworks. Here we go. It's starting right now.
Good morning. This committee will come to order. Chair Powell, thank you for being with us today. I appreciate your willingness to have a chat with us about some of the really important issues facing our country. Without question, the Federal Reserve serves a critical role in the function of our government and the global economy. You have the ability to influence markets and directly impact the financial future of hundreds of millions of Americans. That is why the Federal Reserve is supposed to be an independent institution free from politics. But in recent reality, the Fed has been susceptible to political pressure. Take, for example, the Fed's involvement in the Network for Greening the Financial System, a group dedicated to green financing and climate change, which the Fed joined in December 2020 as President Biden was about to assume office. Just last month, the Fed announced that it had pulled out of the organization as President Trump was getting ready to be sworn in. To the American people, this is flip-flopping in the political wind. Too much focus on climate change instead of supervision is consequential. And in March, just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis. And yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement. And I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB, how can the people who are supposed to be our cops on the beat have not faced any recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. But there is good news. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency,
Everyone's poor.
built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. For too long, bank regulators have followed a black box regulatory framework with little to no recourse. The FDIC, under President Trump's leadership, recently released never-before-seen supervisory documents which confirmed that Biden's Operation Choke Point 2.0 was real, despite assurances that these unacceptable practices would end following the Democrats' first Operation Choke Point 1.0. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions, even if you pressure a bank to cut off services to digital asset firms, political figures, and conservative-aligned businesses and individuals. To me, that goes against the principles of fairness and market access. Over the last 2 years, as the ranking member of this committee, I have consistently argued that Basel III endgame proposal will raise costs and limit credit access for hardworking Americans. And while I'm glad this proposal was not finalized, the uncertainty surrounding Basel III forced banks to put capital on the sidelines, limiting access to that capital for local small businesses across our country. Now, as chairman, I plan to work to rectify the issues of the Biden administration. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III. To create jobs here in America, we need to make sure there's capital and liquidity in the market. And we also want all Americans, even those growing up in poverty like I did, to know that they can access the capital.
Can't wait to hear Powell say the consumer is not
grow existing businesses, buy
fucked.
and pursue their American dream. Chairman, I look forward to your comments and your testimony.
Yeah, local small businesses like Amazon, exactly, superior.
Independent agency like the Fed for liberal positions from debanking crypto, bank stress test, and the green financing scheme is not calling balls and strikes as a fair referee. And I hope that we are getting ready to clean that slate, start afresh, and focus on a healthy economy. Ranking Member Warren.
Thank you, Mr. Chairman. Chair Powell.
Oh, shit, watch out.
You and I disagree
Max puts.
on bank regulation, on monetary policy, and on the Fed's stock trading scandals. We have sharp differences, but I believe you are a principled public servant who cares about this country. We are at an unprecedented moment. Our financial systems are facing huge risks from the economic chaos of President Trump and his co-president, Elon Musk. From on-again, off-again tariffs to on-again, off-again layoffs for tens of thousands of government workers, to on-again, off-again cuts in domestic grain purchases, to on-again, off-again support for medical research. Now, co-president Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. Investigations into illegal foreclosures and auto repossessions canceled. Exams of giant credit card issuers to weed out unlawful junk fees canceled. Probes of illegal debt collection practices canceled. Rules to save people billions of dollars canceled. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin. That is not all. Musk and his Doge crew are also rooting through the Treasury's most important payment systems, the financial plumbing that ensures that billions of payments go through, from Social Security checks to grants for community health centers. No one has verified how they got this access or what they are doing with it. No one has checked whether Americans' financial data has been copied or sold for the personal profit of Mr. Musk. Instead, we've had a series of misleading and conflicting statements by Treasury Secretary Bessent. After receiving public blowback, it appears that Secretary Bessent is now trying to throw the Federal Reserve under the bus. Secretary Bessent claims that Doge can't meddle with the Treasury's payment systems because ultimately the Fed is in control. Now, I'm not sure whether Secretary Bessent doesn't understand how the system works or if he's just trying to shift the blame to you. But I know he is wrong. The Fed simply executes the transactions that Treasury instructs. If Elon and his hackers, for example, initiate instructions to choke off payments to their enemies, or if they issue instructions to shut down payment for teachers' aides for kids with special needs, the Fed may have no way of knowing that the instructions were manipulated, and the Fed may have no legal method to override them. Chair Powell, the next 18 months may define your legacy and the country's trust in the Fed as an institution. I expect that you will work with Democrats and Republicans in Congress if DOGE's next move is to try to commandeer the Fed's payment system. I also expect that you will not join the conspiracy to shutter the CFPB. Unlike the Treasury payment instructions, you can see if the CFPB's funding requests have been manipulated. I understand that some extremists have a different view about what the law ought to be, but under the law right now, impoundment is clearly illegal. Do not make the Federal Reserve an accomplice to this illegal act and forever sully the reputation of the Fed. Keep the CFPB funded exactly as the law requires. We are in the middle of a crisis as Elon Musk tries to take over our government. But let's also talk for just a minute about your day-to-day job, meeting the Fed's dual mandate of promoting maximum employment and stable prices. It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. You have proven you can move quickly when it is politically expedient. After President Trump was elected, within the space of just a few weeks, you scrubbed seemingly all mention of diversity and inclusion from the Fed's website. You withdrew from an international central bank group that shares information on climate-related risks.
Jerome's like,
System. You instituted a hiring freeze that will limit the number of cops on the Wall Street beat.
do you guys mind hitting the like button and subscribe button? Try to see if you guys just like the video right now if you're watching the show on Twitch or YouTube.
Of your strategy, but ultimately it will fail. You will lose good people. Climate catastrophes will continue to mount, and the increasing vulnerability of big banks will threaten our entire economy.
What the fuck's he supposed to do about this? These are directives from the executive branch.
But wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps.
He can't do anything.
Yes, ma'am. Today we'll hear from the Chair of the Federal Reserve, Jerome Powell, on the semi-annual monetary policy report of Congress.
It's just like being yelled at by a teenager like, Dad, why won't Mom give me money? I'm not your mom. I don't know what to say to you.
The Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. We are attentive to
same bullshit
risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace.
You can see that he's staying right on script right now.
In 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have a global impact. You have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating, but in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve's supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach to looking at safety and soundness, and with the number of MRAs that went really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though.
It's funny to watch Jay Powell not address anything Warren said, not address anything this guy said. Like, he's like, get fucked if you're Democrat or Republican.
Diverse banking system.
He's like, I ain't hearing none of that noise.
To make sure that financial regulations do not impose more burden than is necessary. I'll say that.
Just a note here, the 1 in 5 minute trigger, we have a 4 trigger bullish cluster forming on SPY to squeeze.
That the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look on, frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn it over to the ranking member. I'll say this. After having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from the CEOs is that the regulatory OCC and other regulatory agencies said specifically to debank certain industries. And that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman.
Oh, shoot.
Over the weekend, Co-President Musk and Acting Director Vogt effectively shut down the CFPB. No more cop on the beat looking out for a family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to Co-President Musk and CFPB Director Vogt, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I had my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too-big-to-fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, But you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that, and so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any
Any
law
changes, any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very good.
If in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks, it's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks, and I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, you know, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area. I would guess. Our
expectation would be, and the markets would expect that it would be neutral with regard to capital
in that range. But I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And when the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about, is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are, in fact, the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. I mean, one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet, and I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell, thank you, and thank you always for the conversations in between these hearings as well. Let me focus on a couple of things of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes.
Okay.
That's
and
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some
And
financial
that's
market
it.
utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has 10 billion or less in assets, then we have jurisdiction
Right.
on a
So there is
consumer.
a gap. If the hypothetical is true, and what we're hearing, that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and you know, we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
You know, so overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, you know, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here.
Okay, great. Yes, ma'am.
My friend, our ranking member, said that you are knuckling under to the big bank lobbyists. Is that true?
No.
It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect.
The fucking as perfect as it comes.
Your colleagues for
Fuck
that?
you want?
You sure didn't get any help from Congress and on the and
You got a better perfect?
President on the fiscal side. I don't expect you to come.
Super soft,
You and the Federal Reserve can
rolly and wrinkly.
short rates, can't you?
Yes.
Through the open market committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't seem they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and really want to understand better why this is happening. One theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them, and that they just don't. Any red flag is enough. But it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them, the CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reed.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference. We've avoided a recession. And I'd like to remind people how far we've come. In 2020, the gross domestic product decreased 2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra, an increase of inflation by nearly 1%, economic growth depression, and, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clear.
Here comes the touchy.
Not allowed under the law.
Thank you.
No lube now, trading 605.22. This is the market hedge from yesterday.
Banking system.
You hedged in yesterday's close.
And could you give us some insights on how we by regulating
Z-top.
transactions more approprially?
So we
Right where they teed off.
now is looking at them on a risk successfully, then that's okay. I
This is where the big boys were here yesterday, right here.
wants to transfer risk off its balance sheet in a way that's
Woo!
but what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. Was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfer.
Woo-wee.
Synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Affordable housing is difficult. Two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you. Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking.
Look at him step right in. Look at the red bar.
Member. being here today to talk about our economy and all the. I want to address again something
Sellers are like,
started talking about, which was
where's all my butterfly condor traders, my Theta gang out there?
tell you as having been a governor and having a Department of Banking that reported to me that if any consumer would contact
Trade the edges, trade the range.
a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden inflation were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before, at the end of 2019, so before the pandemic, was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion, and by 2022, the Fed's balance sheet hit an all-time record of $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with the chairman is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes, so what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this? Is that what I hear you saying?
That's right. That's right.
I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Okay, we're going to switch over here really quick and just take a look at the chart here, okay? You scale out from your trades. The market hedge is right here, right? We know that this was here from yesterday, right? This is where they are. We came back here today. We squeezed on up on the open.
That innovation can't
beware that sellers are going to come in,
things like
attempt to sell you back down here and get you back for a move lower.
I can
right?
worry, and many of these here
Never a straight shot vertical.
regulatory creep outside the
You can see these sellers coming in trying to sell us back down, right? The smart bears and smart sellers are here,
design it,
here, and then here,
but it is
right? Here.
reasons why I'm looking forward to working with Chair
Let's take a quick look at velocity in a 30-minute basis.
Congress.
We knew this morning coming into the market that daily velocity was quite bullish.
particular within
We also knew this morning that hourly velocity was quite bullish. We actually knew that we were quite bearish into the close yesterday, right?
trying to make sure we get those guard rails put in place.
And then we knew that we were bullish into the open this morning, and what was the result?
Important to me.
A push higher. Now, the concern here is that we're not done going down.
Same activity, same regulatory rate.
We have one more roll into tomorrow's Senate hearing lower to 96.
Briefly
Okay?
on this
This
question,
is still one trend down here.
in the sense,
So remain
if they are similar to
kind of like take the money and run, let the FOMOers buy this squeeze here. If we are going to break out from trend, what are you looking for? This is what I want to show you here. Whether we break out now, tomorrow, Thursday, because the target is where? Target is up here on Friday, right? Way up here is the target
Protects consumers and savers.
for Friday. So you want to be looking for a successful back test of the hourly and half-hour trigger. And then we're looking for a new high up here, right? That's 607.
And how to do
Right. Then we're looking for that high right there, 608, and that high, and so on and so forth as we make our way into Friday and this volatility blows off
with lots of opinions
into the weekend.
on everything in crypto, from over the top to
So if you're looking for a new trade right now as a bull long,
expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers.
here's your three triggers right here. We will look for, this is a 15-minute basis, by the way. We will look for a pullback down here to roughly, we'll try this one right here where all these triggers are and see if we can make our way higher.
Tim Kaine and I did a teletown hall last night.
Into 606 and possibly even 607 and higher.
Maybe 3, 5, 6,000 folks on a teletown hall.
Somewhere just like that. Nice little pump, by the way, in the opening bell. Everyone is nice and hedged.
That
All the bears got you all scared. Everybody's out there buying a bunch of poots.
concern about
We got some charm working in the market right now in Gamma.
whether our
So here's a 1-minute chart right here.
privacy is protected.
That's your 15-minute basis is 6. So let's mark this out really quick. Let's go back to a 15-minute here.
Saying is her deposits at her bank safe. We tried to give her a assurance, but I said, you know what?
That one right there, we'll label it 15-minute.
And with this diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was
Mark one more right down there to close I think there's a gap down here.
Bank accounts overall across the economy are safe. Yes, we've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that,
And be careful because these are real sellers.
in the Treasury market,
This is where people are hedging the market for this volatility that we have. So just note that these are real sellers. They're not fake.
so many of these unpaid tax cuts, Matter of fact, one of the things that was really striking to me was that yesterday,
Slide that back over.
how he was, quote, examining Treasury debt payments
Sell calls to suckers up there.
and suggested that our debt might not be as high as possible. You know, we all understand the full faith and credit of the United States is based upon a reputation.
I'm assuming
President
Chase is not buying poots up here.
I'm wiping off X amount of debt because I don't believe we owe it. What kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that.
We have a nice 5-minute cross as a point of interest right now at 603.76.
President of the United States start to say
We are still sitting above the 1-minute trigger, so as long as we sit up here, we are still bullish to the upside.
Comment on things that the president says.
Right now, 604.65 holding, price target 605.99.
your answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability
Anything above 605.29, we start squeezing.
consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman.
Dixie getting murdered right now. VIX 9-day getting murdered.
Today, conversations about a co-president referencing Elon Musk, referencing the work that Doge is doing. I think it's important to remember that President Trump ran on this. I mean, he said we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's afternoon nap time. And so I just think we need to be a little bit more honest about what's been laid out and what's actually occurring. Chair Powell, I want to discuss some monetary policy issues, but I first want to highlight a few supervisory items. We unfortunately started 2023 with several bank failures in which the Fed itself admits its supervisors were, quote, too slow to ask. The question has been asked earlier about who was fired, who was not. I think that there's some real merit to having accountability that we have not seen there. In the aftermath of those failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard, and then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret. Or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested by the CFPB director each quarter and then directly deposited by the Fed. Is that how that works?
So the director of the CFPB requests money, and we, under the law, we send that money. Yes.
So, in fact, but Dodd-Frank actually prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
up
director.
to, I think, 12% of our, there's a ceiling on that, but that's correct.
So just to level set, how many times, has the CFPB funding request been denied by the Fed?
We don't have the authority
Zero.
to deny it under the law.
Zero, right?
Zero, yeah.
Yeah, that's what I thought. And by the way, I'd like to applaud the current administration and acting director Vogt for inserting some accountability back into the agency by pausing these quarterly just blank checks. On that, I know there's been a lot of conversation around the Bureau over the last few days, but I do want to focus on those last couple of years, particularly the $2 billion the CFPB received from September 2022 up to the last receipt on January 2nd, 2025. Congress specified in statute that the Fed shall fund the CFPB through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has no current earnings. It has a balance sheet of negative $200 billion. So instead of the recent audit statement saying the Fed is funding the CFPB through assessments on its reserve banks, Mr. Chair, there are only two statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB to fund transfers. So what authority exactly did the Federal Reserve have to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact-finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments to do so.
Appreciate it. Thank you.
Senator Van Hollen.
Thank you, Mr. Chairman. I would point out that candidate Trump did not run on implementing Project 2025. In fact, when he was asked on the campaign trail about Project 2025, he said, "I don't know anything about that. Who are those people?" And yet he early on and quickly installed a key architect of Project 2025, Russ Vought, as the head of the Office of Management and Budget, which we know is the command and control center for the budget overseeing all federal agencies. And that's what Elon Musk is doing now. He's implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening.
Tesla getting annihilated right now, trading 337.02.
Cop on the beat to go after fraudsters and...
If you're in our Discord and you get daily reports on Tesla, 340 was the first target.
To our...
Well, it was a tag of 370, a squeeze, and then a trade to 340.
And in doing
then we've got even lower lows targeted 320. Trading 337 right now, a full-on bloodbath in Tesla.
Of those fraudsters. And there's something especially twisted about the richest...
I think Doug is making ridiculous money right now.
Victims of scammers and fraudsters recover just a little bit of their hard-earned money. And I find it especially interesting that the new self-declared head of the CFPB, Russell Vought, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office," unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to not to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it?
No.
No, it wouldn't. And yet, that's what the so-called...
The one fucking stock we picked to short is fucking getting murdered right now.
Rummaging through the private, very personal, sensitive information of America.
I get so much hate on Twitter for this.
So it seems to me that the Trump administration and Elon Musk are focused on everything except what Donald Trump said he was going to focus on during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge due to the nationwide rise in the cost of eggs. They said that's going to be a new surcharge, and other restaurants are following suit. You've seen that, right, Mr. Chairman?
Yes.
Yeah. And at the same time, the Trump administration has restricted federal agencies from providing the public with information about the bird flu, avian flu, which is part of the cost of egg increases. So what we're really facing here is an administration that campaigned on bringing down prices and is not doing that, did not campaign on Project 2025, and that's what they're doing. But when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs. Our Republican colleagues are also talking about passing a tax bill that gives weight disproportionately to the super wealthy, and which will add trillions to the deficit by their own account. They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the deficit and debt put upward pressure on inflation? Isn't that simple math?
You know,
Holy shit. Tesla in free fall right now.
Policies will be implemented, and I just think it would be unwise to speculate when we really don't know. I mean, we see proposals, but it's so hard to say what's going to happen. And
Well, last time the Trump administration was in office, the Fed took actions because they were concerned about the impact of increasing tariffs. Isn't that the case?
we wound up cutting rates in 2000 and I guess it was 19, but it really was because growth slowed and confidence was weak and the global economy was weakening. So the net effect of all that's what we look at. And it's really not just tariffs. It's tariffs, immigration, fiscal policy, and regulatory policy. And those will all go into a mix, and we'll try to make sense of it and do what's right for monetary policy.
Well, if you could just get back to me, I'm not on the question of increasing the deficit by trillions of dollars and what impact you believe that has on inflation and prices. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being with us today. I think you're aware of what direction my questions will take. They will be focused on the bank supervision function of the Fed. And I'd point out that when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress.
Watch out here. They're building support on this 1 minute trigger for another squeeze.
In 2013, when he told Janet Yellen,
Looks juicy.
Congress is our boss. Do you agree with that statement?
Yes, the way I always say it is that our supervision, our accountability runs through the legislative branch, not through the executive branch, as it does in many other forms of government.
Thank you for that, because I wouldn't have guessed that that was going to be your response. The way that the Fed has behaved for the last 4 years in its relationship with the U.S. Congress is to thumb its nose at Congress. Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally misled me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's General Counsel, one of the staff that's sitting behind you today, who said, quote, "The Fed generally resists legislative prescriptions. Now, to me, that's thumbing his nose at Congress, the very people that you and I just agreed you are responsible to and the people depend on. So this is why the American people think there's a deep state. This is why they think there are faceless bureaucrats making policy to hurt the very people of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued by this committee in a timely manner?
Sure.
Will you instruct your staff to be complete in their responses and not to obstruct the oversight functions of this committee?
You know, we always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that, but we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of the oversight that we have over the Fed. Do you commit to disciplining or removing any staff that are found to have engaged in debanking activity, furthering Operation Choke Point 2.0, or other misconduct?
I can't make an open-ended commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to take a fresh look at that. In fact, I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
Senator Smith.
Thank you, Mr. Chair and Ranking Member, and thank you, Chair Powell, for being with us today. I appreciate your presence here. I'd like to start with the issue of the rising cost of home ownership, something that I know is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about home ownership and making home ownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of home ownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in the southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. I mean, these are climate-related events. That's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact that would have on the mortgage markets, on the value of American homes. Just last week, a new analysis from First Street showed that overall, the value of U.S. real estate could be reduced by $1.4 trillion, colleagues, over the next 30 years due to unaccounted for climate risk. That's the cost, the risk of not being able to afford home insurance.
The fuck does this have to do with anything?
Extreme weather events. And the prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair Powell, is given these trends, how do you think the Fed and how do you think we should be thinking about the challenges that these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm asking you to comment specifically on climate change, because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, you know, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, there won't be ATMs, there won't, you know, the banks won't have branches and things like that. Right. That's a possibility coming up down the road. It's not that the banks will stay there and keep making loans in the face of evidence of disaster, or that insurance companies will do right policies. They can cancel those policies every year. Right. So I think the risk is that they just won't be there and that people won't be able to get them. That's really...
That's exactly.
It seems to me that that would be a massive source of instability in our economy overall if you were to see that kind of dramatic decline in home ownership, home values, not to mention the disruption that would occur if people literally couldn't.
Does anybody know what she's getting at here?
It's going to fall. If that happens, it'll fall on homeowners and residents, but it'll also fall on state and local governments. You know, which you see happening now, where they're stepping in states where insurance is going away. Private insurance, you're seeing states step in because they want those areas to remain prosperous. So I don't know that it's a financial stability issue, but it certainly will have significant economic consequences.
Well, certainly to try to figure out how to provide reinsurance as an example in the places where...
What is she talking about? Everyone that owns a fucking house on the ocean is fucking rich.
To follow your chain of...
They can build 30 fucking houses if they want.
Both sides of the aisle.
The fuck is she talking about?
Challenges overall with flood insurance, just as an example, and the massive expense that would have for us.
I got a mansion on the fucking cliff over here.
We need to be paying attention to. I do think it has a fundamental impact on the overall health of our economy as we look not even down the road, but where we are right now.
Putting electrical lines underground is normal.
I have a question. You and I have talked quite frequently about my deep and keen interest in the community.
Fucking everywhere I've lived, my electrical lines were buried. I've lived in rich places my whole life. You live on the fucking ocean in California. I used to live in Santa Monica. I know what rich people have for money. I'm rich where I live. You could burn my house to the ground 10 fucking times and I could rebuild it.
You expressed some serious concerns about labor market weakness and the risk of persistent inflation. But since then, the FOMC has begun its easing cycle and cut its target rate by 100 basis points, as you mentioned in your opening.
I don't know what to say on this. What she's saying.
In the January meeting, the FOMC has telegraphed that it will the labor market.
I don't know. We built the house 50 yards back for another 100 years.
Its target range.
Seriously, I don't know what to say here.
My question is this: the recent market data, including last week's strong jobs report, indicate that the economy is on firm ground. Indeed, swaps markets have begun to price in fewer and fewer cuts this year. And I just...
Hey, check out David AMS inside the Discord right now.
Do you see evidence of a higher neutral rate emerging at this point?
Yes. I mean, let me say there was a lot of reason to be concerned about downside risk in the labor market toward the middle of this year, but really that concern has diminished significantly. Labor market's very strong. I think the evidence is, my own view, and there are many different views on this, but is that the neutral rate will have risen meaningfully. Very hard to be precise about it. From what it was clearly very, very low before the pandemic. Extraordinarily low, historically so. But yes, I think it's moved up, and many of my colleagues on the FOMC feel that way too.
It certainly seems that way. I'd like to turn now to what seems to be a very popular topic right at this point, and that's the CFPB. In your response to Senator Britt's question earlier, you confirmed that when the CFPB submits quarterly funding requests, the Fed is not in a position to exercise any discretion over what the funds are used for. Is that correct?
As long as it's compliant with the law.
It just strikes me that the Fed is not in a position to hold the CFPB accountable for what it does or how it spends its money. Congress hasn't been allowed to hold the CFPB accountable for what it does or how it spends its money. It looks like no one has been able to hold the CFPB accountable at all. And now I hear, complaints coming from every corner, particularly from the other side, complaints about the excessive delegation of authority to a Republican CFPB director when this entity was intentionally created to be wholly unresponsive to elected officials. So I just find that quite rich. Before I close, I'd like to come to a point on climate, and particularly the Fed's forays into climate activism that have taken place over these past 4 years and the recent retrenchment that we've seen. It's one thing for the Fed to disassociate from its past climate activism in a press release, but to credibly claim that it's divorced itself from partisan climate policies, the Fed needs to do more than just issue statements. It needs to actually end its climate policies. The Fed's independence from politics is a headline topic at the moment, of course, and while much attention has been given to potential external pressures on the Fed, I think it's also critical that we scrutinize how the Fed's own regulation and supervision might be utilized to in some way politicize the institution. So when the central bank strays from its mandate by embracing partisan climate policies, the Fed embroils itself in controversial political debates and invites legitimate political scrutiny. So I just want to urge the Fed to refocus entirely on its core statutory mandates. I know it's a commitment that both you and I share, Mr. Chairman. Thank you for being here with us today.
Thank you.
Thank you.
Thank you.
Senator Warnock. Thank you very much, Chairman Scott, and welcome again, Chairman Powell. I want to echo the words of Ranking Member Warren and so many of my colleagues today on DOGE and Project 2025's illegal attack on the Consumer Financial Protection Bureau. Certainly the Bureau was not created to be dismantled. And since its inception, the CFPB has been the only federal agency solely dedicated to protecting Americans' wallets and pocketbooks from scammers.
Tesla trying to turn around right now.
Financial services. The CFPB reduced costs for Americans, returning more than $21 billion to Americans who have been cheated since its inception. I want us to focus on that as folks are talking about chasing after waste and fraud and abuse. The CFPB has returned more than $21 billion to Americans. Make no mistake, this attack on the CFPB will increase costs for Americans, and it will give the green light to fraudsters and predatory actors seeking to cheat hardworking Americans. And so, Chairman Powell, thousands of Georgians of all political stripes have written into my office, and they are alarmed by an unelected billionaire and his hacksters' dangerous attempts to access Americans' private data and the Treasury Department's systems that control $6 trillion in annual payments to millions of American citizens, including Social Security, Medicare, and tax refunds. Quickly, yes or no, has Elon Musk or members of his team, to your knowledge, attempted to access the Fed's protected data and systems? Yes
no,
or no?
I don't
To your
believe so.
knowledge.
I don't believe so.
Okay, so will you commit to report to this committee, majority and minority, immediately should you become aware of any such attempt by Elon Musk or Doge to pierce the Fed's independence or to access its protected systems?
Yes.
Thank you for that commitment. The Fed's latest monetary policy report states that the tight labor market has allowed employment and earnings gaps between Black and Hispanic Americans and white Americans to narrow. I was glad to see that many of the long-standing disparities in employment and wages by sex, race, ethnicity, and education have narrowed under the Biden administration. Some gaps have reached historic lows. Specifically, the employment gap for black workers and white workers is near its lowest point in almost 50 years. That is the economy that the Trump administration is inheriting, a historic low in almost 50 years. Chair Powell, as you work to promote maximum employment, what steps will the Fed take to ensure that these equity gains are permanent?
So the best thing we can do is it's both of our mandates, really, because as you well know, high inflation hits people at the low end of the income spectrum first and most. And in addition to that, we know that the benefits of a strong labor market over time can be really visible and important in those communities as well. So we pursue our mandate, we keep our heads down, and it works out that is the single best thing we can do to foster, closing those gaps.
You pursue your mandate, you want to make sure that it's working. Would you agree that we still need good equity data to continue to narrow and close those gaps by race and gender?
I do think, we're always going to be in favor of good data at the Fed, and we do have quite a bit of that data on our website.
But if we don't have equity data, it'd be difficult to know, right?
Yes.
I'm glad to hear you still believe in the value of good equity data for economic policy making. It's better to fly with the data than to fly blind. I'm not sure what's so controversial about the data. And while I was disappointed to hear that the Federal Reserve, which is independent from the White House, it scrubbed a diversity and inclusion section from its website after President Trump's executive order, while also scrubbing data on the racial, ethnic, and gender makeup of its economists and researchers, I hope you will continue to ensure that the public has good data on how our economy is working or not working for historically marginalized Americans. I also hope you will reconsider your decisions around the whitewashing of the Fed's website. Chair Powell, as we think about the value of protecting data on the black-white wealth gap or employment gap, I think it's important to understand what policymakers can learn from this data. Historically, from what you've seen in the data, historically, what types of economic events have caused the black-white wealth gap or employment gap to widen?
Well, high inflation, downturns. You see generally, just take the black unemployment rate, it generally moves at twice the speed of the white unemployment rate. So when it goes up faster, and when it comes down faster. But there is, at the end of the day, there's always been a gap, and we want to run a strong labor market, and we target overall overall labor market conditions for maximum employment. But one of the benefits of that is that gap comes down.
Thank you so much. We all know that fully deregulating our financial regulators like the CFPB, firing bank examiners at the FDIC, or weakening the Fed's supervisory capacity makes an economic shock or recession more likely. We know that this disproportionately impacts Black and Hispanic workers, and there are real consequences to weakening and eliminating financial regulations that keep us safe. Working people are the ones especially who suffer. So thank you so much, and I look forward to continuing to work with you to close these gaps.
Senator Banks is next. Thank you, Mr. Chairman. Chair Powell, thank you for presenting your report to the committee today and for coming to meet with me last week in my office as well. The Federal Reserve has enormous power over Americans' ability to work and earn a living. And the Fed's interest rate decisions have an especially big impact on industries like manufacturing, which depend on big investments. Chair Powell, the Fed's data on manufacturing is still holding up nationally, but it doesn't look very good in the Chicago region, which includes most of my state in Indiana. The Beige Book says manufacturing jobs are declining and fewer people are buying manufactured products. It also says that steel demand is at a low level, auto production has slowed, and machinery orders are down. What does that say about the rest of the country? When manufacturing in the heartland slows, does that signal trouble for industries in other parts of the country?
It can. It doesn't always, but it certainly can. We watch the manufacturing sector. It's very important. Manufacturing jobs tend to be high productivity jobs. They're very important in our economy. But I would say over the last couple of years, manufacturing was pretty weak during, during years in which we had high GDP overall. Manufacturing is a smaller proportion of the economy than it used to be, but it's still extremely important.
Senator Reid asked you why free trade doesn't work when one of the giant players doesn't abide by the rules. The China shock is proof of that. The Fed has a mandate to maximize employment. How do you account for the whole industry that is repeatedly suffocated by unfair competition?
We don't do trade policy. We're not responsible for it. We don't comment on those who do trade policy. So we don't really have a role in focusing specifically on that. That really is left to those who have
12:30.
Do you agree that a healthy manufacturing economy is important to a healthy overall U.S. economy, though?
I do.
I hope you had an opportunity to read Robert Lighthizer February 6th essay in the New York Times. He explains why a big trade imbalance between any two...
Still want to see this get hit down here, and it's not being hit.
How does the Fed take the trade deficit into account in your decision-making at all?
Again, we really don't. We're aware of it, but it's not something that directly affects our mandate goals.
So not at all?
No. I did read his book, by the way. I didn't read that editorial.
Fair enough. It is a good book as well. I want to get into tariffs. It's no secret that most...
Uh-oh. Watch out here. Watch out.
Tariffs. But I want to note that Indiana gained manufacturing jobs during President Trump's first term with the 2018-2019 tariffs. Even though the economist's conventional wisdom is that tariffs will reduce jobs, do you commit to following the data and not prejudge any outcome?
Very much so, as we did in 2018-19.
Let's see if he says the truth.
Finally, my staff reviewed the research paper on tariffs in preparation for this hearing.
Oh.
I want to point out one of them called The Employment Consequences of U.S. Trade Wars. Mr. Chairman, I'd like to enter this paper for the record. It found that the timing of tariffs are very important. It found that China's retaliation to President Trump's tariffs did hurt U.S. jobs, but if the U.S. had imposed tariffs on China much earlier in the 90s and early 2000s, it would have almost completely eliminated job losses due to the China shock. And I know you've said what you said before, but will you and your staff please take a look at this paper?
We certainly will. I imagine we already have, but I'd love to see it.
I appreciate that. Home ownership is an essential part of the American dream, but families are struggling to afford homes. In just 5 years, the price of a typical home in Indiana has gone up more than 60%. More than 3/4 of American families can't afford an average home in their neighborhood. How do the Fed decisions about monetary policy affect the ability of regular families to buy a home?
Most of what will have driven that increase will be about some of it's about local regulation, as you I'm sure know. It's also about just wages going up and costs of materials and things like that going up. And land costs and all that are going up a lot. The channel that through which we affect housing is, of course, interest rates. And right now, interest rates are still pretty high, but actually, mortgage rates are really not set at the Fed. Those are really key off of longer run.
Exactly.
Nonetheless, we're clearly having an effect on the housing market.
Tell them why, though.
That'll unwind as we normalize policy, but we're still going to be faced with high insurance costs and high material costs and labor shortages and all the things that keep driving housing prices up across the country.
Thank you. My time has expired.
Next will be Senator Gallego.
Thank you, Mr. Chair. Mr. Powell, just kind of
not much there.
That made a thought. The housing costs are one of the top concerns of my constituents in Arizona. From 2010 to 2022, rents in Arizona increased by 72%, and I wish wages were as
to
match, but they did not. And the average 30-year fixed mortgage rate has been above 6% for nearly 30 months. With very few rate cuts anticipated in the near future, potential cost increase from tariffs or imported construction materials, as well as the demand that we're going to see in terms of rebuilding.
Let's look that up, that fact.
And labor shortages. What do you think needs to happen to make housing more affordable in Arizona and the United States in general?
Housing policy and things to help housing supply are really in your wheelhouse, not ours. I do think the housing markets around the country are still suffering from the after effects of the pandemic. Once that's all the way through and short-term rates are down to normal, whatever the new normal level is, I think
Because I know nationwide ask versus actual or ask versus actual came down significantly.
Lots of the urban areas, the obvious places to build housing has happened. So I think it's a long-term, there's a short-term problem which will go away in coming years, but there's a longer-term problem with housing availability. And that's going to be something that's not within our authorities or power to affect.
You know, one of the things that I've seen in Arizona is because we have people that are locked into mortgages at 2.9, 2.8%. And in order for them to move to the new house, they're going to have to essentially go and try to get, quote unquote, a bigger house, but the mortgage payment is going to be through the roof.
No, that's not true either. This is all bullshit here.
Set the mortgage rate. At the same time, one of the biggest drivers, obviously, of inflation, especially in places like Arizona, is housing costs. And then
So people are moving into new houses with higher rates, but they have accumulated
which is driven by housing costs.
wealth in their current homes. So they're kind of like flat when they move into a new home right now. This is disingenuous what this guy is saying.
For there to be some understanding on that, because it's the reason we're not breaking out of this cycle is because the problem kind of feeds itself over and over and over again.
No, that was true months ago. People are actually buying or or instigating new mortgages today.
That would increase
the class of people that did not move or stayed in their homes. They're beginning to, at this point,
both a buyer and a seller. So it's not clear that would be something that would drive.
That's all the data says.
Well, my supposition, especially in places like Arizona, which is really growing fast, is that by increasing supply with lower rates, you end up essentially having more of a competitive market. So people.
And in 2024, Phoenix has seen a 3.5% decrease in rent asks.
From businesses in Arizona, they're concerned about the threat of economic stability.
I'm looking at the data right now.
That are imposed on our key U.S. trade partners. How should we expect prices to move for basic items like tomatoes, peppers, cars, and the like if we place a 25% tariff on Mexico next month, as the president has threatened?
So, as you know, we don't do tariff policy, and we don't do commentary on tariff policy. I mean, just generally, when somebody's got to pay the tariff, and it can be the exporter, it can be the importer, it can be a middleman, and it can be the consumer.
For it, though.
Somebody does, but in some cases it doesn't reach the consumer much. In some cases it does, and it really does depend on facts that we haven't seen yet.
But that also contributes to some of the calculations on inflation overall.
It can, but
briefly.
There's a question of how persistent that would be and how long.
Exactly. Briefly, how persistent is it?
So, and of course, I understand you're not here to.
And it also matters how well off the consumer is. These are things that no one wants to talk about.
Is it your opinion, let's just say a base opinion, that high tariffs can lead to higher costs, which would then end up being seen in terms of your inflation calculation that helps you set the rates?
So I'd say that's a possible outcome, which will depend very much on specific facts about what's being tariffed for how long.
He's being really nice to this guy right now. It's a possible outcome. Briefly.
Senator McCormick.
Thank you, Chairman Scott.
Not the likely outcome. Inflation dropped when Trump increased tariffs in 2018, if you don't know that.
By more than 50%. Debt held by the public, or true debt obligation, has more than tripled during the past 15 years, reaching more than $28 trillion. All told, U.S. national debt is now over $120
Now, here we go with the debt bullshit.
And runaway spending contributed to a regressive tax on all Americans, a tax known as inflation. In the past 5 years, the cost of living has skyrocketed for working class Pennsylvanians, especially, as you and I discussed when we visited, those relying on fixed incomes. And unfortunately, that compounded effect of inflation has not been offset by commensurate rise in wages for many Pennsylvanians. I've heard from countless Pennsylvanians who had to count their dollars at the gas pump, cancel family trips, even tighten their belts at the dinner table because of inflation. So while we discuss these heady issues, let's not lose sight of the very real human cost of the decisions made by people sitting in this room. And given that cost, I'd like to ask you about the national debt and the cost of financing it. We now spend more to service the debt annually than we do on national defense. So how concerned are you about the accelerating pace of government borrowing and the borrowing cost which will affect families in the form of higher mortgage rates?
Yeah, we don't comment other than to say that, as my predecessors have said, that the U.S. federal budget is on an unsustainable path. It's not that the level of spending or the level of the debt itself is unsustainable. It's that the path is unsustainable, and ultimately the level of the debt will be. So there's no time like the present to start working on this. The longer we wait, the more painful it will be. It's something we need to do and will have to do in the long run, and the short run is better than the long run for that.
And just as a practical matter, how do you factor that into your policy thinking and decisions?
We don't. We're here to achieve maximum employment and price stability, and it's really up to Congress to deal with fiscal issues, and we leave that to you.
Well, just as a more practical question, I think which falls clearly in your bailiwick, because of that national debt, it's caused the supply of U.S. Treasuries needed to finance the debt to skyrocket. And that's at the same time the Fed is shrinking its holdings of Treasury through quantitative tightening. So the question is, or could you at least give us some insight into the impact that this is having on the Treasury market as investors must absorb that supply? And in particular, I'm interested in how the biggest holders of U.S. Treasuries, how their behavior is changing as debt increases.
So this is a real Treasury question, but I think from our standpoint, I can say that there are lots of buyers for Treasuries, but Treasury buyers are going to be factoring in their assessments of the supply that's coming, and that may be part of the reason why the term premium has increased, as you know, over the course of this year. Although the rates have been going up and down lately, they're almost back to where they were before the election.
I know the Fed has been moving forward with comprehensive changes to the stress test process. Could you discuss how you're thinking about reducing the volatility of the results and increasing transparency on the stress test?
So on transparency, we're going to release the models, clean them up and publish the models, put them out for comment. In terms of volatility, we're also going to release the stress test scenarios before we implement them. In terms of volatility, what we said we would do is average the changes to, the problem is the stress capital buffer can be moving up and down just because of volatility in the results, and it seemed like a good idea to smooth that out by averaging over a couple of years. We're putting all this out for comment, though, and ultimately we'll reflect those comments in the final decisions we make.
Thank you. I'll yield back my time.
Thank you, Senator McCormick. Senator Blunt Rochester.
Thank you, Chair and Ranking Member, and thank you, Chairman Powell. It's good to see you, and thank you for meeting with me last week. We discussed everything from jobs and housing supply to the real impact on Fed policies on all of our lives. And I also got a chance to share with you just the concerns and consternation of Delawareans who, for the past few weeks, have been frightened by firings and funding freezes, and just the real impact on people's financial and personal data and information when, DOGE has access to this information. I'm hearing from my constituents as well about the potential shuttering of the Consumer Financial Protection Bureau. As Senator Warnock mentioned, CFPB has returned over $21 billion to millions of consumers, and that's a real impact. But I want to also highlight that it was your leadership in the Fed working with Congress and the Biden administration to really help answer that question that you were asked about if you had the choice to switch countries with France and Germany and others, that you said no, you'd rather be here. And that success is a testament to all of us. We came together during a really tough economic time at the end of this, during a pandemic, and it limited the recession and job losses. And since COVID, we've seen a robust job growth. But we also have grappled with inflation that drove prices up for so many goods. And I've worked to address one part of this phenomenon, our supply chain disruptions. In fact, I recently joined Senators Cantwell and Blackburn to reintroduce the bipartisan Promoting Resilient Supply Chains Act to address supply chain vulnerabilities. And while we see indications that inflation may be slowing, too many of our constituents are still facing high prices and economic uncertainty. We need to do everything that we can to address this anxiety and the realities that Americans are facing. And there seems to be a disconnect. While the economy is doing, well here, on the ground, people aren't really feeling that. So, Mr. Powell, can you talk about, from your perspective, just what is driving this disconnect between traditional economic indicators, such as GDP growth and the stock market performance, and the tangible benefits for families?
I'd be glad to. So it is clear that the overall aggregate numbers are just very, very good for the economy. 4% unemployment, inflation down to 2.6%.
Hey, I got to talk to you guys here. Hold on here. I got to mute.
These are good.
I got to talk to you guys just really quick, okay?
Is the results of
if you got the brief last night, IWM is sort of squoze off the bell this morning. They're rolling down right now.
earnings releases.
Be careful here. I've got us like tagging 15-minute here to go higher.
Income people, they're all telling you
there's a possibility of being drug lower here with IWM. I'm like watching IWM in the background because I'm like, that thing's probably the most bullish of all the discords of all the ETFs this morning. I'm like, yeah, that one right there was like the one that I was like, yeah, it's probably gonna squeeze right at 9:30. It did. It rejected where it should reject on the daily trigger.
To get inflation back.
It fit bloodbaths. There could be a big bull trap in here, so just be careful. The indexes are starting to realign here. Just be cautious that this does not hold here. And you've got a bear plane coming up here.
About this, but
so you can see this 5-minute trigger, this 1-minute trigger, and they could just start raining hell down here. Take us down to 60282.
Things that we can really address the housing supply and affordability.
I'm going to get rid of this one here.
I have legislation that
It originally said look for the 15-minute to buy to go up here. But I want to see if they take us down here.
Local governments make a significant difference.
Just be chilling here.
Would love, again, to follow up with
Mostly because I can't see, IWM right now is not showing if it's bottoming or if it's going to blood out. Because we've got IWM getting shanked, and we've got Dow Jones getting shanked today, and there could be under the surface of the market, even though we're squeezing, some kind of bloodbath. And we still haven't hit 96 or 596 on SPY. We got one more day of this stuff going on. So as usual, trade the edges, buy some puts or whatever on a high. Buy some. It's fucking simple. You don't need to sell options here. Actually, selling options here is way less profitable than buying calls on bottoms, buying puts on tops. A day out, two days out, week out, or whatever, and then just hit the edge and get out. There's actually more profit right now and easier. There's low volatility right now. Selling options is always better with high volatility. And the volatility is generally speaking kind of shit right now. So it's actually better. You're actually doing better owning an option at super lows and at super highs. And whether we do that right now or not, let me show you this. Watch this chart up here really quick. Oh, wrong one here.
I think it's Martin Luther King. We may have come over on different ships.
You just be patient. It doesn't matter if this squeezes back up for a double bear top or whatever. Just be patient. It'll come back down. This has been going on now for weeks. So just watch this right here. Watch
when you increase M2, the money supply, by 40%.
You get this and you think it's going to keep going, and it just goes just a little bit more down. You catch that wick, right? Whoop, right down there. And you've got now a nice fat wick you can buy, and you're trading the edges. You guys get what I'm saying? Let me show you the edges here. The edges have been fucking phenomenal. And just look at the edges right here, right? You've got an edge up here.
That happened because of
public
policy.
You have an edge right here.
Correct. In other words, there wasn't a
You
civil.
guys understand what I'm saying here? It doesn't matter if it takes a little bit for it to come down.
Elected leaders,
right? You're just trading the edges, like short up here,
That was
long down here, fairly simple until we break out of a trend. You can put a stop underneath that we start like doing overhang and blasting down or whatever.
closing and reopening.
You don't need every last little bit.
A bunch of
So
confusion.
just let me draw this in for you really quick. Just like scale out a little bit, chill out.
Fiscal policy or not.
Put that one right there, right?
There were many factors, and that's, I would say, one of them.
But just to be clear,
Nice and easy. This market's been like one of the easiest markets to trade in a long time.
didn't decide one day to close.
Just watch this one right here. You see those two little thingies right there? Fairly simple, right? And let's go back here and just look in here and see what we got.
So it's a little disingenuous to be hear my colleagues talk about how they.
So do I care? Do I care if we come back up here and catch that? No, I care about being down here. Right on this second 15 minute, trying to catch that next wave higher, okay? Right down here. This is 602.82. If we get a little bit a wick down lower at 95, 96 today or tomorrow or something like that, even better. We should be clearing out the all-time highs or near it on Friday.
Good question.
So just be patient. Just be patient, okay?
That concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think that's extremely important. It makes me very happy to hear you say that. Shifting gears to a little bit something that matters to me and entrepreneurs all over the country is why can't I wire somebody money at 6 p.m. Eastern time? Can we get to a 24/7 scenario where wires are cleared every day, all day? I think that would be very, very helpful to businesses all over the country.
So that's coming. It's just coming slowly here. We have that at FedNow. We'll get in touch with you about FedNow.
You're welcome, guys. Just be super cool. Like, it's too easy. This shit's too easy. You just like chill out, relax.
It is
wait for the price to come down to you. Get back in calls again. If you bought puts above, right? If you like sold your calls and you bought puts, just hang on to them. Wait till they print. Close them out. Fucking easy. Easy.
By the end of this calendar,
You should be making money on the regular right now.
Exact 24/7 and settle payments.
Well, I think they can do that now I believe they can do it now on FedNow, and they can also do it on the RTP system as well. So I think it's available. Let me check in and I'll follow up with you.
That'd be great. One other piece of the puzzle here is what do you think the Fed can do to fight international terror groups? For example, Hamas, Hezbollah, Iran, the proxies that are funded by places like Qatar. Do you think that we're doing enough to keep them outside of the banking system? Because at the end of the day, terrorism is ultimately funded by these bad actors. I met with the hostage families this morning. It was heart-wrenching to hear stories about kids that are my kids' age being held for almost 500 days. The Qataris are obviously completely complicit in all this. What can we do? What advice would you have that we can do to make certain that we bring these terror groups to their knees?
You know, we do enforce the money laundering laws very, very strict, but it's a tough question. You know, it's a huge focus in international meetings and things like that. But you're right; it's really hard to nail it down, particularly if it's all overseas. But we can.
Booze coming down right now, bouncing on the. We do have a half-hour trigger crossing the hourly trigger right now. Watch out for a squeeze.
Money laundering laws. I mean, that's some of what's happening, according to the banks, is that
yeehaw, baby.
Money laundering.
You wanted to close some puts here, not a bad place. If you want to re-enter for a second round,
Perfectly legal businesses are being, thrown out because of their fear of being caught doing money laundering. So, I think there's a balance there. But no, it's a really, really hard project and one we spend a lot of time on.
Thank you, Chairman.
Thank you, Senator Marino. The patient and persistent Senator Kim.
Thank you. I wanted to make sure some of my colleagues had a chance to be able to run off to some of their meetings, and I've enjoyed being able to listen to the chairman. to be able to hear some of your articulation here. I just want to share with you, I did a telephone town hall last night, and I'm glad to hear some of my other colleagues as well. And there is a lot of anxiety right now by the American people in trying to understand what's happening and seeing and interpreting what's happening on the news. I guess I just wanted to ask you, if you were, for your words of how you would explain to the American people the importance of independence when it comes to the Federal Reserve.
So I think the point is that we'll make better policy, we'll keep inflation lower if we just focus on doing our job and stay out of politics, stay out of elections, don't try to favor or to hurt any political party, any political figure, just focus on the data. If we start putting up political filters, we'll be no good, we'll be less effective at our already quite difficult job. And I do think that's broadly understood. I think there's broad support up here in both political parties and on both sides of the Hill. I think that there is a decent degree of support for continued independence. That's not to say we shouldn't be accountable. We should be very accountable and transparent about what we do. We should be up here explaining what we do and why to our oversight body, which is this committee and then the same committee on the House side. So that's what I would say.
Making decisions about your core mission about stability and about growth, but not thinking about it in terms of the context of an election cycle, for instance. Is that right?
Yes, exactly.
I wanted to just shift gears a little bit, but similar type topic. There's been a lot of attention to the role of public servants within our government and, our understanding what roles they play, how many to have. And I guess I just wanted to ask if you could speak to the role of the Federal Reserve employees, their qualifications, and more importantly, like their importance to the mission and being able to engage. How important are they to the work that you are trying to do towards stability and growth?
So I'm very proud to be associated with the people of the Federal Reserve, and I'll give you an example why. When the pandemic hit, kind of out of the blue, and economies all over the world are shutting down, the U.S. Treasury market is stopping to function, companies can't roll over their commercial paper, economists are writing about a depression, people who went through the global financial crisis 10 years before step forward and say, we got this, we know what to do. Here's what we do with the Treasury market, here's what we do with money market funds, here's what we do with the companies that can't get any financing. The markets were closed and companies were having maturing debt that they had to roll over. The people who knew what to do in that pretty dire emergency were working at the Federal Reserve and other places. But I will tell you, it was impressive. And I think if you could have seen the way people react and how hard they work and how much they know and how well it worked, really. Our work during the acute phase of the crisis was very successful, and it's entirely due to the knowledge base that resides with career people at the Fed.
Yeah. Would you say that the Fed is overstaffed?
No, I would say that, overworked, maybe not overstaffed.
Nice, J. Powell.
It works really hard. It's a place where people work.
And a lot of this conversation right now about staffing numbers at different departments and agencies, it's going back to this sense of the taxpayer dollar, in terms of accountability there. But I guess I just wanted to ask you, is the Fed paid for by the taxpayer?
Blood in the marketplace.
The burden is on the taxpayer?
So we're self-funding through our large balance sheet.
So when it comes to the staffing at the Federal Reserve, not coming from the taxpayers, is that right?
Indirectly, we give away all of our profits. We give back to Treasury, and those profits would be higher if we didn't pay for the Fed. So in fairness, it's ultimately paid for by the taxpayer. But in that sense, we're self-funded.
Self-funded.
Yeah.
Just one last question here. You talked about the different actors that are involved when it comes to levying tariffs in terms of paying that the exporter, the importer, the consumer. You said middlemen could be part of that. I guess I just wanted to ask you, do you know of any way in which to 100% guarantee that the consumers will not have to pay higher costs when it comes to tariffs?
Not really. It's not going to be easy to identify with any accuracy exactly where costs do fall, but I think it'd be hard to guarantee any particular outcome. I think we're just going to have to see.
Great, thank you. I yield back.
Thank you, Senator. Senator Warren, did you?
I do. Thank you, Mr. Chairman. I just want to make a point before we quit here, and that is about law enforcement. If you keep the laws the same on the books, but you fire the cops, you're going to have a lot more crime. That's kind of law enforcement 101. And the problem we've got right now is law in the books about consumer protection hasn't changed. But the cops, at least right at this moment, have been told at CFPB to stand down. And I appreciate that we have state AGs who step in, and often they partner up with the CFPB. But there is no one else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo scandal, where Wells Fargo was illegally opening fake accounts in people's names? You find that through bank examination, not because the person who got cheated could figure it out. Bank of America gets hauled in because bank examiners discovered they were charging people illegally on junk fees. Nobody finds that but the people who are down in the banks doing the bank examination on behalf of the consumers. Look, we tried a patchwork of law enforcement for consumers before 2008. We had all those laws scattered among 7 different agencies, and we saw how it ended. It ended with millions of people losing their homes, millions of people losing their jobs, millions of people losing their savings.
Dude, work from home is still alive and well right now.
Law enforcement agency to make sure that the giant banks follow the rules on consumer protection. And for me, right now, I'd be really worried about doing business with a giant bank when there's no cop on the beat.
Everyone's working from home.
Senator, I will recognize myself for just one question, and it'll even be relevant to your job, I promise, Mr. Chairman. So thank you for your patience and for being here. I wanted to follow up on there were some questions, or at least I know Senator Rounds asked a Basel III question, and your response was basically, let's get the people in place from the administration, and then we'll proceed again. Treasury Secretary Besson recently said that the banking system is, I believe, said, quote, well-capitalized, perhaps over-capitalized, unquote. And given that assessment, or if you agree with it, could you discuss the necessity of advancing a new Basel III proposal, specifically how an updated regulation would impact the ability of the regional banks to compete with the big Wall Street banks? And what considerations should be taken into account to ensure that we have a competitive banking system? Because I know there's this concern comes and goes, and for those of us who have largely regional banks, or God love them, the best of all, community banks and credit unions, a competitive system is really important. So if you could just answer that, and then I'll wrap up.
Sure.
There was like on the Fed News subreddit, someone was like, they just ordered us all back to work today.
To try
There's like 7,000 of us, and the parking lot now only holds 1,500 because of work from home. There was like 5,500 people with no parking going to work that morning, like a week earlier this week.
Mario Draghi said that. Dan Tarullo said that.
Like they got rid of the parking lots for the jobs in the Fed.
That's about right. We have some work to do, but we'll get there, I believe, fairly quickly. In terms of your regionals, they don't face the GSIB surcharges. They don't face quite the burden that the large banks face on resolution planning and that sort of thing. So we need those banks to be healthy and profitable, because we need them to compete with the GSIBs. We don't want a world where the GSIBs just keep getting a bigger and bigger share of the economy. That's not what we're looking for, and that's what a lot of pressure. We've seen the number of community banks, especially, declining for 30 years.
Yes.
And this is not something we want to. We don't want to be the cause of that. If it's happening by natural causes or because of evolving technology, that's one thing. But we don't want to be inadvertently causing that to happen.
So as you look at a Basel III exercise, can you think of anything specifically that ensures that competitive, diverse banking system is maintained rather than a consolidation, whether it's fewer community banks into more regional banks, or fewer regional banks into more Wall Street banks?
Well, I just think it's, you think twice before you impose the kinds of things that we impose on the largest banks and the next to largest banks. You want to be careful not to just think we should do exactly the same thing. It's what tends to happen is, so for smaller banks, it raises the fixed costs, is what it does, of banking, and it makes it harder to start new banks, and makes it harder for any but the largest to be successful. So that's not what we want. We want a lot of competition, and these regionals. It's important that they thrive.
I agree, and I agree with your assessment. So thank you for that. Thank you for staying with us for the day, and glad we could get you first. So as we wrap up, for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Tuesday, February 18th. Chair Powell, you have 45 days from that day to submit your response to questions for the record. Thank you. The committee stands adjourned.
Thank you.
All right, I think we're done here. Personally, if you ask me, it was a kind of a big nothing burger. In last night's brief, we talked about like canned ham, right? Jerome's not. He's just not going to get pulled into this shit. He did make a few comments here. He did make a few. I'll read to you some of the comments that he made. But you're expecting, like, there was like 2 or 3 like screaming at him, like, you can't do this, you can't do that. And the Fed's under mandate, I actually looked up how the Fed was formed, and like the authority, because Trump wants to assert authority over the Fed. And so I'm like, let's go down the rabbit hole and figure out how it was formed, what they like. It's not bizarre, but like the presidency can give mandates to the Fed, and the Fed though is like on their own to gather that data and then re-provide that to the government. It's like a circular relationship, rather than I try to simplify it for people where I say, if I'm the executive branch, I say to the Fed, I want labor data. And so the Fed gathers that labor data and then presents it for consumption by different entities, including the executive branch, right? If Trump tries to assert authority over the Fed, they would collect the data, give it to the Fed, and tell them what to do with that data, right? So right now, the Fed, the mandate goes to the Fed. The Fed gathers that data. They make decisions what they're going to do, and then they hand it off to other or organs in the government to do what they need to do with it. So, like a lot of the stuff that's said to the Fed, like, you should not do this and you should be doing that, he can't unless the executive branch tells him to do that. The moment the executive branch says don't do that, they can't do that stuff. And then, like, I'll read you some of this stuff here. Give me a second here, because there were some. He did address. I've got some notes over here. Let me see if I can read some of this stuff to you. There was a lot of shit said here. But earlier, so we can go back here. He stayed basically in policy. We do not need to be in a hurry to it. There's some key points here. Let's go over here. Let's go over a different screen here. Got this nice little tag right here, right? Beautiful. Let's go down below, and let me switch up some stuff here for you. Just parked. Let's go down here and look in the. Here's Gamma. And just bouncing around, right? Just up, down, up, down, up, down, right? Just looking for a place to buy the dip, buy the dip, buy the dip, right? Just nice and easy. There's SPX. If you really wanted to trade the edges, you could be just waiting down here for an edge to grab. Whoop. Waiting up here for an edge to sell. You can see this super trend right here, right? We're trading in the middle. right? If we drop down before we go higher, you know where that is. Just see the dragon tail over here. Here's the back leg. Here's the body. And then you get this one moment here of a swing high. So if you are looking for that, you guys see it now? See the dragon? See the body of the dragon? I don't know if you see it, but but if you see it, you might get one little bounce right here. Watch this right here. Whoopsie daisy, right down there. There's 96, I think, on SPY, and then we're off and running to the upside. We got one more day of this stuff. We got CPI tomorrow in the morning. The day is generally over. I would expect us to trade in this range until morning. You need volatility to get down here, though, right? You need bad CPI numbers. You need someone crazy from the Senate or from the Senate or from the House of Reps to get us down here. Some bad data of some kind. So what we'll do is we'll trade right in here, right? Just right in here, waiting for either good news. Watch this right here. You're waiting for good news to break out, bad news to break down, good news to break out, volatility to enter the scene, volatility to blow off, volatility in the scene. And then we get into that right tail, right? Right, we head into volatility, we head out of volatility, and whoopsie daisy, we're up and out of here, right? So if you are looking for like that bloodbath or something like that, you have one more day basically, and you got CPI. If it comes in good, then you're fucked on PPI, and you're gonna run like crazy until we get to retail sales, right? To that open. So you got one more opportunity if you're a bear. Today, tomorrow, or I wouldn't say today. I would say tomorrow morning, or tomorrow morning for CPI and for tomorrow's Senate hearing. There could be some front running of that volatility too. So you wake up in the morning for CPI, right? We're down here. They say fuck the Senate hearings, and then we get the Senate hearing. Right tail or left tail. Excuse me. Right tail is done. So we're out of here. Or SPX at the money curve starts to blast down, and then you get some nice little Vanna and some charm for that squeeze higher into the Friday open or some shit like that. So what do I got here? Let's go back to the main screen. Sorry, I'm trying to like a garbled mouth while I'm trying to think about Jerome Powell. So Jerome Powell did speak about some specific things with Trump and policy here. And some of the discussion on that was had over the week on FinTwit about the Treasury Department. Let me read some of that to you here if I can find it. I love that. Not for me to say we've experienced the soft landing, but we have not experienced the hard landing. And the guy was like, "Are you sure? It seems like it was pretty soft and flaccid. Wasn't the best one ever, but." Let me see here. I loved this comment from Powell. He said, and I agree with this 100%, right? You can you guys know I'm a Democrat, but some of this Trump stuff I'm down with. He's a populist. This guy, Rick Trump, is not a Republican in any sense of the word. Fed's Powell saying the standard case for free trade still makes sense, but didn't work that well when we had one large country that didn't play by the rules, right? We know that we accepted China into the WTO. We know that they made promises and they didn't keep them. We also know that they're fucking with the MCA, right? We know that we go to Canada, and we go to Mexico, and we say, hey, we want better trade relationships with you to encourage manufacturing. Does Mexico do some of that manufacturing? Yes, but then they also have China. I sound like Trump. Fucking. Building manufacturing plants and then labeling these goods as being made in Mexico, but in fact these companies are owned by China, circumventing trade agreements that we've previously made with China. To what end? We know what end that is, right? War. We know that's for hegemony. We know that it's to own the oceans and the skies. And we're not going to go down without fighting for those things. So that's where we're at right now. There's some and there's also some, hey, Mexico, kick these guys out of the country. Panama, kick these guys out of the country. We need access to waterways. And we've got a war brewing everywhere around the world right now. There's more layers to this stuff than just, hey, I want my fucking cheap iPhone. I want my fucking Temu clothes. I want my throwaway t-shirts right now. There's more geopolitics at play to this stuff than meets the eye. So what else we got here? Let me see what else he said about we would use quantitative easing. No, hold on. None of that. There was something he said here about Treasury. I'm not seeing it. I thought I read something about it earlier, but I can't see it right now. See if we can get back up here. Now and trade this. Hold on here. Trade this back up here, right here. See if we can trade that one maybe right there. And then see if we can catch one more high up here. Something like this. Catch that one right there. Look for getting roped in somewhere in here. I got that right? I don't know if I got that right. I gotta count this again. Hold on. Big bumper down. And you've got what? You've got dealers that are going to destroy the chain now, right? Wham up, wham up, wham up. Dealers destroy the chain until vol in the morning. All right. What else do we have for you guys here today? I'm going to take a quick break. I got to really take a piss. I've been up, I think since 4 a.m. or something like that. I'm working 18-hour days right now. It's no joke. I'm feeling better. So I've been working my balls off. So I need I need a 5-minute break here. And I'll be back with you guys in 12:27. I'll be back here for 1 p.m. I'll give you an outlook for tomorrow. And yeah, give me a quick break. I literally, it's been 18-hour nonstop days. Crash, sleep, wake up. Are we going to get another dip buying opportunity? Yeah, well, didn't I just say that? I just said to you that you've got one more opportunity for a dip buy. So you're going to be did I just go over this? All right, let's go over this one more time. You've got one more day of Senate hearings. Volatility passes, right? This one was pretty tame. Usually day 2 gets shitty. In my experience, right? Day 1's pretty tame and everyone gets very complacent. They're like, "Oh, that was great, man. Tomorrow's fucking Senate hearing is going to be a cakewalk." And then you're like, "Oh, Warren's the worst of it." And then they bring in the gang, and the gang comes in, and everyone's long for Friday, and then they're just wham, straight down to the depths of hell. Everybody's long and calls and shit for a print on Friday morning. So for me, at least, I would say you have one. I would make the statement that you have one more chance for volatility through CPI in tomorrow's Senate hearing. Whether that volatility is realized or not doesn't really matter. And you'll probably get a dip in there as long as CPI doesn't come in hot and we don't go too fucking crazy on tomorrow's hearing. And you should get a print up into Thursday close before the retails. If everything goes well, you got no problems with the Senate, you got no problems with CPI, you should get that nice fat print into the Thursday close, and then we deal with some volatility on retail sales Friday morning. They'll blood you down slightly and then squeeze you back up. into the close. We should get an all-time high into the weekend. I do want to impress upon you something important, which is I want you to go back and look. I'll try to dig it up and post it for you in the Discord if I have the time today. Think about what Rubner said, where he was like, hey, I'm full bear starting around the 14th, I think he said. 14th, 18th. And that is next week. So today is the 11th, right? We got 11th, 12th, 13th, and 14th. So he starts getting bared up right into the weekend. So, you think we get an all-time high print maybe Friday morning, Friday close, Monday open in that vicinity, right? You got some calls to print on next Monday or Wednesday. You're trying to or monetize those bad boys between, Thursday close. Let's call it Thursday close to Monday open. Trying to catch a print, get out of the market, and you let the volatility pick up next week. Does that make sense? No? Don't know what I'm talking about? Yeah, they do. They do, Mr. Talking Monkey. So I was talking to 45 Forever about this recently. We were having a discussion about 45 Forever and I were talking about like how they run this stuff. You'll see it oftentimes in like how you can see it more clearly is in a big bill passage. Senators are expected to have some decorum generally. Even if they disagree or agree, they generally expect to have some decorum. The House of Reps is not. They're almost like a bigger whip. So let's say I was a senator and I'm a Republican from Michigan, and I want to see the bill fail. Or let's say I'm a Democrat senator from Michigan. Doesn't matter. And I want to see a bill fail. I'm going to try to make an agreement with my counterparts in the Senate, at least publicly for the people at home, right? We're all like, I'll come on TV and say to you, we're really close to an agreement right now. My counterpart says the same thing. Really, we're working together as best we can to get this done. We have a few minor disagreements. We don't know. We think we're trying to get this passed by Monday, right? That's what they say, right? Then it doesn't get passed till Wednesday or the next Friday or whatever. Now, what happens is the House is where all the action takes place. That's where you, like the senator, I'm a senator, I go to the House whip and I go, poison pill this fucking thing. Poison pill this fucking thing for a week. Fucking sink this fucking bill forever. When, sir? I want you to like negotiations for the next week or two, and then I want it to fucking die on the floor on March 15th while I get my put print, right? Going, this is how it goes. And then all of a sudden you'll see like the guy that I want the whip to do this. I'll go and say, I want Talking Monkey to fix this thing, or he's out of the party. You know what I mean? Mr. Talking Monkey's like, yes, boss. I'll make sure we make a deal. You know what I mean? So you separate the two of those things and think about that when you have these hearings. You get day one where everything is good and calm, and then day two, these senators leave and they're like, I want you to go in there and fucking, what's the like? It's like Karate Kid, right? Break his leg, that kind of shit. Yeah, the House. Tomorrow's the House. I think tomorrow's the House, or at least they'll send in some henchmen from both parties. You'll get henchmen from both parties tomorrow. It doesn't matter. It doesn't matter who the party is, but this is just like politicking, just like normal part of politicking. Yeah, it's kind of like at Fed meetings too, right? They have the staged reporters in the beginning, and then you get batshit crazy the longer their questions are asked, right? Hello, Mr. Powell. Is the stock market going to crash? I think it is. What's your take on that? You guys have never seen the House? Oh, like they're fucking crazy. if you guys should tune in on C-SPAN one day and listen to how it doesn't get as raucous as like the House of Commons or whatever, but it gets pretty fucking wild in there. 100%, Lisa. 100%. Yeah, the Rubner crash. He does a fairly like. I gotta give some. Like I know Rubner or Rubber. I know that Rubber is like sell side, but I gotta give it to the guy, man. That fucking guy. He does a pretty decent job. I can't say I don't like him. I know he's selling his. Ohm, but I realize he's selling his own. But he hits it. He comes out and takes a victory lap every once in a while. Rightfully so. I got to give it to him. So you don't need necessarily have to believe in the crash. You just step away for a minute, right? It's okay to step away from the market. Just be like, some vol coming. I'm going to step to the side and I'm going to stay to the edges. We go down, we buy it. We go up, we buy it or sell it. This market's been fairly easy for that. You know, you just wait for the edges. As long as you wait down at the edges or above at the edges, you're good to go. Don't be in here in the middle trying to diddle, as Mr. Yen would say. The Rubner crash. You want it so bad, Hack the Planet? I've got a hedge on for it. Well, I've got a hedge on for one more leg down this week. I have another hedge that's bigger, but I think I have to close it and put it higher. I think we get like an all-time high. We have to do another hedge. I think there's like one. I think I got to do one more like Friday, Monday at some point. Oh shit! Condor's coming in. Hold on a second here. Condor's in the Discord right now dropping his trades. Fucking tying in the market right now. I haven't looked at Bookmap. Hold on one second here. We'll take a look at Bookmap. I think we're going higher. Hold on here. What do we got here? There's still that bar down below. There's still like this one more, still a little bit of demand down here. We got some supply right here. Let's see what we can see. See if there's anything. Oh, there's one more little one down there. You see that little bugger? He's down here hanging out. And you're right, there is some supply overhead too. There's both sides here. There's that larger band that we showed you earlier. Hold on, I don't know if I can get it to show on the screener here. You can it's disappearing, but there's one down lower and there's one up here. Hold on here. I don't know if I can get it to come on this screen. The screen's kind of fucking funky that I've got it on. I need a much larger screener. I got a fucking giant like 60-inch and 80-inch TV I could bring in here and it'd be fucking dope. I could scale it all down and we could see every fucking level on ES. I should think about that shit. 100%. All right, we're going to take a quick break here. We can get, hold on here, we'll push this way out into like 6 p.m. or 6 p.m. or whatever. We can get all that. Trump's saying we're going to take Gaza. Yeah, JC, I'm with you. The tape bombs. The tape bombs are gangster right now. .602 is not going to hit today. I thought we already hit it, didn't we? I think we go. Time is right now 12:40. Can't tell just yet, but I still think we have this like. Where is 6 p.m. Like there's like there like if I was a dealer. Yeah, it's somewhere down here. Man, like these fucking bears have. You know, like the worst part. The worst part of this is. There's the market hedge, right? Well, you know what the worst part of this is? Is like, I was posting about this on on Twitter this morning. Was like they're claiming it's crash, and I'm like, yeah, maybe you get that. Like, you might get that. Like 96 would probably be the. I think that's the best you can ask for. There are a lot of people that are like crash here and then down and we're out of here like 5% like right now. I think that takes time. I think that comes like I think it's possible to get this one and then up to the all-time high and then you're back and over to the actual major downside roll. Or maybe they hem you in on no all-time high. So it would look like where's the all-time high? So where's next week? Go to a 1 hour. There's the all-time high right here, right? So, like, I think worst case scenario you're looking at is like 96 maybe. Then you're like up and away into Friday. They hem you in maybe no all-time high. Rubner steps in with the no all-time high, and then we get the major legs down. That's where you start seeing like the blood. Bam, bam, bam. And you'll come back in like a month or so and you'll say, it did crash, bro. But, not before they fucked you right up here. Like, I would think if you're going to trade that major correction trade, it's here. What they want to see is like blood, rope you in, doom, 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 elevator down, haha, bulls. I get it. Haha. Fuck you, bulls. You thought you had it. You thought they're going to tell you, oh, you thought it was going up there and stuff like that. So none of that stuff's showing right now. So it's not showing. We need it to show we need it to show. We need the new low. You got this low over here. You got this bad boy right here. Whoop. You got that one, and that's very bullish right there, right? They want to see like blood down, new low. we're out of here. We're not seeing it yet. So if that happens, we'll get that bared up. We'll get all bared up, and we'll put the lube. We'll start shaving the hair and we'll let the hair grow out. But until that happens, let's look at velocity. See if that's showing it. That's not showing it. For that Rubner trade, this isn't showing it. Let me show you this. So we're bullish on daily velo right now. You see it? You want to come into something like this over here, this upper daily velo. They're gonna fucking destroy bears into like late March. That trade's more prominent than the crash trade. If I had to assign like higher probability at this point, the trade is if I like today had to be like asked, is the way. If I had to be asked today, like, say we get the weakness for Rubner. So if I had to be asked, like pinned to the ground, said, where are we going, Cap? You might get that low down there. You're going to get the high. They're going to fail to get the new low next week. And then we're going to super ramp this shit into mid-March. Like, I don't know, March fucking 18th, I think. And then you would actually sell April. But things can change. Things can change. You get some bad Senate shit. Bears start getting constructive. Bears start getting constructive here. They get constructive on Friday. We'll start switching our viewpoint to, maybe the Bears are right. Maybe we're going to have that fucking 5% downside move, and we'll start trading it. Just the key point here is to remain hedged on highs. Trade the market the direction that it's showing you. Right now, it's up and to the right. We're in a bull market. Where are we at right now? We are still, I don't know, we're 1% from all-time highs. We're up in around 1% from all-time highs. So, are we in crash mode yet? No. Are we in, I've heard all kinds of shit like 2 weeks inside candles. I've heard all kinds of nonsense. In my own view, if you're following that, like, inside week crash, I would think that there's like this trade into like March for fail 25, and then you get that actual fucking crazy. We're not crazy. You get one good one, maybe 5%, and then you come back up for July, and you'll like fail 650, and that's when you get your crash. That failure of 650 will send us down 20%. I think that's July, but don't hold me to that. We got a bunch of stuff here too. We got like MCA stuff. We've got NATO stuff that builds up into June. There's a bunch of shit that nobody's talking about. You'll hear whispers of it, but then you have like the breakdown of tariffs, the pricing in it. Like you get a 5% down move for the April low that prices in tariffs. Then you get a crash that I think revolves. Don't hold me to this because the market likes to write their own story as to the reason we're crashing. But I think that the real reason is a buildup of this MCA NAFTA thing, coupled with geopolitics with fucking NATO, and I think that, and also budgets for March for the 5% tariff move down. And then of course the summertime one for me, that's like the one for March is like the tariff and the budget bullshit, and then the summertime one for me is the probably NATO MCA. I think that's going to be the fucking one hasn't developed yet. They're like meeting in Brussels right now. There's like a bunch of different meetings coming up, like Besson's going to it. A couple other big time key cabinet members are going there to negotiate with NATO, and the EU is already speaking and talking. And I think that you got like Greenland, you got Panama coming up into all this. I think that comes like center stage late summer. We get into the doldrums, and like we squeeze it up into mid-July, and then it gets fucking messy. And it's going to get messy in September too. Just think about that stuff, okay? And you got one more stab at it. If anything, the Bears will try to front run that vol into CPI in the morning. Listen to me closely, like they run that vol into CPI. They don't care if it's a good print or bad, and they'll do the Senate vol, and they'll be like, "Hey, I got my print. I don't give a fuck if it's good or bad. I just want that payday." And then we're off and away, jet setting. All right, I'm going to take a quick break. I'll be right back with you guys. Just trying to catch up here in some shit. Hold on. I got back. I got some stuff to read to you guys. Woo! Hello, ladies. Nice. Hold on a second, everybody. Like strip my hair over here. Oh boy, someone was in pain there. Woo! Look at that dirty over there. Oh, dirty. Dirty girl. Well, you know, there's someone's hurting puts right now. Was that nobody was short down here, were they? Hope nobody was short down here. They're just annihilating. Does anybody have the bear? I'm gonna post this. Hold on, give me a second here. Now that right there means people are trapped. We're gonna continue to squeeze here. The people are trapped. They have to chase this. Oh God, they're gonna get fucked here. I'll use this one. This one will work. Hold on here. There's another. No, there's one like where he's impaled. That was a good one though. 45. There's one where like it's a green bar and it goes straight up, and there's like a bear impaled all along the candle. That one's fucked up. That one's super fucked up. I haven't been able to find it. It's very. I used to have it. I don't know where it is. Ouch. Pain. I gotta find the one. That's actually a good one. That was fucking brutal. That was a good one, Pesky. I like that one too. That was a good one. There's one where it's like the bear stand. There's like a big candle just blasting through him. I don't see him too often on socials. Oh my God, that's a good one too. I like that one too. I'm reading some of these ones you've got inside. That's a good one. That's a good one, 45. Hells yes. Trading 605.28. We've got R1 is 606. Let's take him for a ride, baby. Now we had the prior high here. We just got the new high. Can we sneak it up there? Whoop, whoop. We need a little sneaky sneak before we come back down. Let's take a look at dude. What's up with Tesla, man? What's going on with Tesla? We're top of range right now. Just here, hold on. I want to show you guys something here. Just note that this is top of range. You know, take the money and run. Right, up, down, up, down, up, down, up. If we do the breakout, you know, you can wait for that and then get long on a new high right here. Otherwise, if they run you back down, it's not just the breakout, it's the breakout and the new high to get long in. Okay. So let me show you what that looks like, okay? If you are getting bullish, you take the money and run. Well, that's right here. You see it? If you are of the opinion where you race out of here, and we close that up out there, you want to see what? Let me show you here. You want to see the pop up and then the new high. Like right there, you can have your finger on the TQQs. You grab that up there. We try to do that one right there. But you got to get the high and then the second high. It's two highs. Otherwise, you don't mess with it. You just close out your calls, hang tight, and you know if it rolls back down, you're rich and you're not giving any money back. Make sense? So don't get too crazy here. The 30-minute boner formation. You just hang out here, don't do shit. I think that people are trapped in here. They want out, but they can be made to go higher. So I think we definitely trapped some bears in here. I bet someone was short, and they're like, oh, fuck. I'm getting a margin call. Oh, the memes. Oh, good meme. That's a good one. That's a good one. Oh, dude. So terrible. They don't listen, brother. They don't fucking listen. Oh, dude. So Dr. CS, so like, dude, yesterday I watched fucking Twitter brigading crash. That's what I saw. So this morning I was like, you know what I'm going to fucking do? I was like, you know what I'm going to do? Hold on a second. So this morning I got on Twitter. And what was it? Stock market crash. Stock market crash. Came up as trending when you typed it into a post. So I was like, hell nah. So I posted on Twitter and said, so I posted, Twitter and said, hey, FYI, I'm going to hit post stock market crash all morning. Mostly mostly to see if the market could become overhedged. Yeah, brother. Like, Twitter is a place where I don't know that you can impact the algos in that fucking thing, but like, you can do it on Reddit easy. Like, Reddit's very easy to manipulate. Twitter is fairly easy to manipulate. Or at least like encourage it. Like, oh, you're lighting fires over there? Let me go help you. I can fucking light the fires. Sure. Let's do it all morning. Then you'd be surprised what you grab in the honeypot. Like, motherfuckers are like, yeah, dude, it's going to crash. And I'm like, no, dude, it's not going to crash. Other dudes are like, dude, you said it was going to crash. I'm like, no, it's not going to fucking crash. I'm like, I'm trying to fucking, like, I even call it like a honeypot. Like, the danger is the vol passing. I think there's more danger next week too, but there's like things that have to happen. Like the robots and the algos and the computer programs and the software and the or we need like a Trump tweet or some shit like that, or we need like People are ready for this. And there was a real problem this week too. I don't know if Trump did this intentionally, but when they tell you it's going to happen, when they're like, "Hey, we're going to have a nuclear war on Monday at 9:30," and it's like Wednesday, the week before, not happening. Like if there is a nuclear war on Monday, the market will fucking melt down, and you are supposed to buy that dip, believe it or not. Whatever that dip is. But when they forewarn the entire fucking world, the volatility was removed from that, or at least the initial volatility. You can still price that stuff in, but the volatility is removed. You know who speaks about this right now is Vol Wiz. Scott speaks about this right now. He's like, there's no fucking vol in the market. And do you know the reason why? Because Trump can't shut his fucking mouth. If Trump were to come in and just like, you didn't know there's going to be there was no discussion about a tariff, and Trump just walked in tomorrow and said, you didn't know anything about tariffs. And Trump just said, I'm signing an executive order today. I don't know, 25. It wouldn't even be 50 or 100, just 25. Fucking market would implode in itself. It's not priced in, and the vol's not priced in, and blah blah blah. So it doesn't mean we can't or won't price in tariffs. It just means that because they said something about it, it's not going to happen at fucking 9:15 or 9:30 when they're going to sign it. So you're not out of the woods in this stuff. Do not think that they're not going to price in tariffs. They are. I 100% assure you they will. And there are reasons for that. And it's a one-time price in. If you don't believe me, go find Wolf Richter. I'm tired of explaining it to people because they don't understand tariffs. So I don't want to go into like the deep dark details of it, but it will be priced in. Whatever tariffs are finalized or as we go along, it's a one-time shock to the market, but the market recovers. Like, remember those words, and they're going to do it at some point. So you are going to get that shock. There's some initial things that go on, like initially. So companies are very companies are smart these days. They're not your granddad's company, where they might be like, oh, I let Susie, I let her pilfer a little bit. I'm not looking for max profit and all that kind of stuff. Like, companies today that are publicly traded companies have very, very intelligent people that max profits. That's their job, their only job. Groups of people. How much can I charge, depending upon the economy that we're in, taxation, economic conditions, whatever, like my max that I can make from that person. If you think that McDonald's is going to give you a fucking discount on Coca-Cola, you're out of your mind. Even if you're perceiving that is not the same as max profit. So there's not a lot of room in today's world for profit, or there's not a lot of room today to pass on new costs to the consumer. There's a little bit in the beginning. And sometimes you'll see like inflation spike, but then it drops. And you'll see some greedflation in there too. You will see some of that until everybody matches each other. There'll be like little windows of arbitrage, just like you saw with UPS and FedEx and the USPS with China stocks or China tariffs on Temu goods and stuff. They jumped out right away and said it's $25 or $21 to process this. That's fake. There are companies that do that very cheaply per parcel. It was a money grab. Would you be stupid not to do it if you were a large package delivery company? And so there are those initial shocks, but what truly happens is concessions are made from the producer. Concessions are made from the opposing country. Concessions are also made by the corporation. The company that sells you these goods will take less profit. And that's where it doesn't happen immediately, but it does happen where their profits go down a tick or two. GDP actually is impacted as well. So like GDP gets impacted and the market will reprice all of that less profit in to the market. So you'll see it. You'll see us get a shock from this. It just might not be today because they're so public about it. Trump talks a lot. He's constantly fucking talking. So you don't know what's real, what's fake, what's going to get thrown back at you. You don't know what's finalized. Even when he finalizes some of this stuff, he comes out a week later and says, "Oh, we made a deal." It's like, do these things take effect? You can't trust anything. Even when he says, no matter what, this is happening. You like have to have it in fucking stone, in fucking writing. The company that's doing it is agreeing to it or saying it's happening. The country that's getting it done to them is retaliated, and that's all finished. Then they price it in. So we will get that price in. It will impact our GDP if this all comes to pass. If this all this like tariff wars come to pass, whether it's now or the last half of his presidency. So we might have two shocks, like a shock for what's going on now, and then the next round of possible tariffs as things ramp up into the end of his presidency. Trump's likely going to be our president, more than likely going to be our president. He's still alive and stuff. He's not doesn't get too old or whatever. As we go to confront China, right? And as we ramp up all of that rhetoric, and not just rhetoric. We say it's rhetoric, but it really isn't. I talked to Joe yesterday. Joe, I'm gonna tell you guys some stuff. Like, I got elected officials in my family, major ones. I have a brother that works for Tesla. I have friends that have worked for Tesla for a long, long time, since day one. In that group of friends and family member and stuff like that. But then I got a brother that I have an actual brother that works. I'm not going to tell you what he does, but and I was in the Army for a long time. I was between the Army and the reserves. I was in 12 fucking years. And I know people in the military. And I was talking to Joe last night, and he has a very close friend of his that is doing similar stuff that my brother does. And the last time I talked to Joe, I'm like laying all this stuff out for him, and it sounds like crazy and conspiratorial because the military lies to you as a civilian, and the government does, and they do it intentionally, and they should do it because everybody's listening and watching. There's OPSEC, and it's important that whatever conversation you're having as a civilian is more theoretical and not based in reality. And that's used to gauge American sentiment or your country's sentiment and stuff like that. There really is true security in what's going on. And he talked to this buddy of his that's in the Pentagon and shit, and he confirmed what I had said. So like where we are and stuff. And some of this stuff is like piecing together. I think that as it becomes more true over time, you're going to be like, oh, fuck, that's why we did this, or oh, fuck, that's why we did that. Now, some of this shit I don't agree with. I'll be frank with you. Like, I am not down with Elon doing what he's doing. But some of the stuff that Trump's doing is probably not entirely what you think it is. He just doesn't like this country, or he doesn't like that country, or whatever. It's likely tied to greater geopolitics coming our way. Whether he is or is not president, it needs to happen. Anyways, I don't think that's political. I know that he makes it political and he talks about it, and the whole fucking shit show disaster along the way. But anyways, you'll get your first shock, and then you get your second shock, likely like year 2 or something. You get one now, and maybe you get one like, I don't know, maybe you get like an escalation in 25, 26, or it could be 26, 27. One way or another, you're going to get a couple shocks. You probably get one like beginning at 26, and even if you don't, you'll definitely get one by 2027. That's the bad one. That's the confrontation with China. That's really happening. Isn't that wild? I don't know if it's cold, if it turns into Cold War or hot war, or if it turns into surrogates and stuff like that. But and you got to remember something: the U.S. military doesn't fucking lie. I got to tell you guys that. Like, I got to tell you guys that shit. Like, it's weird. Like, the U.S. military is a weird fucking thing. When I was young, I used to think it was more like, oh, U.S. military threatens you or something, or there's negotiations. Maybe they break down or something like that. The U.S. military behind the scenes, though, they are fucking a machine. They are not fucking around. There's an old adage that Saddam Hussein really didn't think that the U.S. would invade Iraq, and He was like, "There's no fucking way they're going to do that. We're going to negotiate. They're going to do their saddle or their sword rattling and all this kind of stuff." And the U.S. was like, "We're fucking taking this guy out. Like, that's what's happening. Like, I don't give a fuck what anybody thinks." You have to understand that shit. That's real. In the background, like U.S. hegemony is a legit thing. Not legit, but it's a serious thing. No matter what anyone's telling you, politicians, whatever. And hegemony for most nations, whatever sphere they're in, is real. Like we fight about this stuff since the beginning of man. Like this isn't anything new, even though we try to sugarcoat it or cover it up, whatever that is. In truth, behind the scenes, that's not how things go. It's not the reality of the world. You can disagree with that. You don't have to like it. You don't have to address it or accept it. That's going on, but that shit's going on. You can be against it. That's okay too. You can say I don't like this or don't say this. But just be aware. The awareness of it. That's like pragmatism, right? You have to be pragmatic. You have to be pragmatic why people are telling you things now that make no sense to you. A lot of that stuff is usually not. It's not quite testing the waters. It's introducing the conversation so that conversation evolves over time. Those are scary things too. I had that conversation with my daughter last night. My daughter and I were spending time late last night together, and we were discussing like change. And she was discussing how at college they're scared of change and or the rapidity of change. And I'm like, well, you might not get all this change today, but I would be hyper aware of it at how quickly things can change. So you have like the introduction of a conversation, let's say. As I was talking to Joe last night, I'm not going to tell you what I said, but you can see this on a smaller level in smaller relationships. So if you have a wife or husband or brother or friend, and let's say your relationship, I don't know, you're only friends playing tennis together. And you want to expand your relationship with your friend and now play baseball. And you know your friend doesn't play baseball and abhors baseball. So but you want to play baseball with your friend, right? This can be a positive or negative or whatever, but what do? You think to yourself, well, look, I want to play baseball and my buddy doesn't. I'm going to stop playing chess. All right. It cuts into that time with playing chess or whatever. You guys play together or whatever the fuck it is. So you say like, well, I'm going to introduce the conversation. Hey man, you ever think about, playing softball instead of chess one day? Whatever fuck it is you pick. No, man, I hate softball. And you already know that. There's like pushback, right? And then you like start talking about it over time. Thursday nights, man, it's like it's getting warm outside, dude. We've been playing chess all winter, dude. And they're going to start this like, I don't like chess or I don't like softball, right? And another month passes and you start pressing the issue. And eventually you're fucking either playing softball together or you're playing softball alone, right? That happens in a lot of relationships and stuff in life. So I was talking to her last night about that. I'm like, I was like, you would? I was like, you might even not have that conversation with a Republican or MAGA. You might be having that conversation with a Democrat, because that door is open to that conversation, and it doesn't matter who's in power. And then you have to ask yourself the question: Why are these doors being opened? Even if they don't get fulfilled today, do they get fulfilled in a year, 5 years, 10 years, 15 years, 20 years down the road? They may never come to fruition, but why are they asking those questions? Why are they opening those doors? Even if it's not going to happen or there's a speed bump, you have to like go to the root of what that shit is. Like, what is the root of that conversation? And be aware of it so that you can confront those things as time passes, right? Agree, disagree, whatever, it doesn't matter. So back to tariffs. If we don't get priced in tariffs today, there could be a delayed effect. They could wrap that shit up with weakness next on the 14th, 18th of Rubner's, correct? Or possibly even as late as March, April, whenever they're all wrapped up. Like we've got everybody on board. You could even see it, a delay in that until Europe tariffs. Like, what are you going to do? Shock the market for Mexico, then shock the fucking market for China, then fucking shock the market for fucking Colombia, and then shock the market for, like, maybe you're waiting until they're all wrapped up in a nice bundle, and then you shock the market all at once. Or they shock the market quickly with no big downside move. Instead of the big 5% move, it's 1%, 1%, 1%, 1%. So be aware of that stuff when it comes to like tariffs and tariff shock and all that kind of stuff. And we're not at a point right now with increased tariffs where we're peaking past where a company can't afford those tariffs or a consumer cannot. That's one of the fucked up things right now. Like, a consumer is really well off right now. They can absorb tariffs. And Jerome said that today. Or in as much, he said that today. And he dismissed. He was like, that's one way this can happen, but not most of the ways this can happen. The consumer can handle this to some extent. Corporations have record profits. They can handle this. Higher tariffs. There is a point where the consumer can't handle it and companies can't handle it, where a company can't survive. Or they got to make cheap. They have a lot of layers to that, though. They can do cheaper products. They can source out new suppliers. They can end frivolous, low profit items. That's part of our business cycle and economic cycle too. Same with the consumer. They're like, hey, you know what? I don't need this, right? So I'm not going to buy this anymore. But I can. I still want my eggs, but I don't have to have my avocado. Or whatever it is. Doesn't matter. You could just make fucking ketchup. All of our ketchup comes from country X. And now it's like 4 to 5 times. You know what? I can just eat hot sauce with my eggs. So even when there's a breaking point in the consumer, you might start to see one company fall off. But you might see another company come into its place before it's a true issue. Like this, these are things that take time. And tariffs aren't at a level, they're getting there, but they're not at a level of the depression crash, where they become a little bit too much for the consumer to handle. At this point, we're not quite there yet. We priced that in. We had our second round of tariffs too, and we had another crash at the end of the year in October, November. We had 2 of them, two pricing events. Mm-hmm. I think we get them. Like, if you ask me, are they going to price in these tariffs? You're fucking right, they are. But it's one time. Market continued to go up and to the right to 2019. And what's crazy about that too, just that you're mentioning that. GS's 2025 outlook in the first page. It's on our website. I've got it on our website for you guys to look at. But in their first page, they were like, this reminds us a lot of 1928, which the first 2 years of Hoover's presidency was up and to the right. The last 2 years of his presidency, market began to crater in like October, I think, of his second year of his presidency, and the platform was very similar to Trump's. A lot of similarities, and then Trump had a similar platform his first term, and we saw a lot of the same price action in his first term. What was really bizarre about 2019 too, when we came into COVID, the market was topped. Like, if we didn't have COVID, we would have had a crash anyways. COVID was, in my view, just used as the excuse to sell the market. Or it was a nice catalyst that happened to align with where the market was. The market was like maxed out in Velo on every frame. And the market was anticipating a recession coming into COVID before it was a thing. If you were a participant, then you know this. People don't know that because they weren't in the market then. There's a rise of retail trader that just like overran the markets in COVID. There's like a whole class of people that didn't trade at all before COVID, and a whole class of people that at least had some exposure to the markets. knew some of this stuff. Yeah, I don't think though that we're looking at it from that perspective anymore. I think that war was on track pre-COVID, and it got delayed, and now we're back on track for that war right now, or that confrontation, I should say. I hope we don't have a war. I don't want you to think that I want a war, or that I'm a warmonger either. I've got daughters. I don't want to see my daughters go to war. I don't want to see your kids go to war. I don't want to see the world at war. I hope it doesn't turn into that. So don't think that like I approve of this. I approve of the ending of where it's heading. Because one way or another, there's a confrontation. And normally that's how it happens in societies. Fucking thankfully, the confrontation with Russia did not end with the annihilation of the fucking world. But I grew up in that. I was a young child when the fall of the wall happened. And we hid under our desks. The threat of nuclear war was real, or at least in our minds it was real. When I was real young, we had not everybody, like most buildings had a fallout shelter in it, active fallout shelters in it. That was real stuff. That was a reality. I talked to my daughter about this last night. I was like, it's fucked up when you live through those realities. We've had those moments in history. Like we had that moment in history with depression. We had that moment in history with World War II. We've had moments similar to that, and this is recent history. We had a moment like that in Vietnam. And we had a moment like that in like the 1960s to early 70s. Like I think J6 was bad, but J6 is nothing compared to some of the shit that was going on in the 60s and 70s. Like there was like crazy shit going on. There was like kidnappings going on and bombs blowing up shit. That was probably the closest we ever got to the Civil War in the 1860s. And no one talks about that time period. I wasn't alive, but I've had people and I've read books, of course, but I've like asked people, what was it like in that time period? Those people are all boomers now. That's all the boomers all lived through that shit. They are, when I see J6, I'm always like, these fucking guys were young when that shit went down. They already had that experience embedded into their brains when they were young. That they know about this stuff. You don't. You're young. You're like, I wasn't alive then. The only people that remember that shit is people that are today, what, 60 to 75, 80 maybe? Somewhere in there. Oh, yeah, baby. I remember that. I do remember that one. This is your brain on drugs. I remember that one. 100%. I remember that. I actually had that video. I saw the one when I was a kid, the brain on drugs. And the other one was where the father finds the kid with the pot box. It was like a cigar box of pot in it. He's like, where'd you get this? Where'd you learn how to do this? And the kid looks up from the bed and he's like, I learned it from you, Dad. He like gets like all somber. When you do drugs, your kids do drugs. Yeah. Boomers collecting HELOCs to buy spy dips. I was just offered one. Yeah, who reached out to me? SoFi reached out to me. Like, you want a loan, man? You want a $100,000 loan? I'm like, what? We can have the money to you today. I'm like, fuck no. Get the fuck out of here. Yeah, David. 100%, man. Kent State. Recent Vietnam veterans, right? 101st Airborne comes back from war, fucking mounting bayonets on fucking carbines. Fucking what? Take a bunch of fucking, like, you don't, like, today they don't allow that shit. If you come back from war today, they lock your ass up for 3 months on a base. They call it putting you back in the box. They didn't do that shit back then, did they? They're just like, hey, you got back from the war? Let's go break up a fucking protest. Like, the fuck? Man. Dragging ourselves right back down again. A little bit of a pumperoonie. cooling it off again down here. Market just wants to unwind, doesn't it? Well, there's like a I have a list of these. I have a list written somewhere of the meetings with Besant in Brussels. There's like 4 meetings in Brussels. They start in March and they wrap up, I think, in June or July. And I think like the EU, I think like it's not like the EU right now is talking about like we'll counter tariffs and all this kind of stuff. I don't personally think tariffs are finalized with the EU until that whole EU discussion is complete with NATO. I think that wraps up in summertime. I would assume so. Instant payday USA, get money today. Yeah, no shit. I saw that shit in the military. I was never that guy. When I joined the army because of my father and my family. My father's father, right? I'm the son of my father's father. My father's son, all that stuff. You know, I woke up one day and I was like, I'm not a man if I don't do this. Literally. I was like, I'm never joining the army. And then I woke up one morning and I just said, fuck. I gotta do what my dad did. My grandfather, my uncles. So I didn't join the army for those reasons, but I had a lot of friends in the army, man. Fucking payday loan scams. Like they had like wives, like got married, joined the army, buy a Mustang. And with like 30% fucking payday, not quite payday, but they would take payday loans. There used to be like payday loan predators outside of every base. Base, man, the towns outside of bases were gross. It was nasty. Yeah, Jason. One time I discussed that here in the show and people got angry at me. Well, somebody addressed it on YouTube, which was kind of cool to see. I addressed it here before that guy made his video. I understand that. I mean, if you're a civilian, your heroes are easily like Delta Force or JSOC or high speed, no drag fucking operators and shit like that. And I understand. I respect that. I was like that when I was a kid. But like in the real world, those fucking guys are. You don't want those guys as your. Keep them as a hero. It's better for them to always be like that. People were like, they should put them in power. I'm like, you don't want those guys in power. Fuck no. These guys get in trouble all the time. These guys are bangers. Fucking hammers on nails. Like you're out of your fucking skull. You put them back in the box. That's what they used to do us in the army. They'd come back and they'd be like, okay, we're gonna put you back in the box. What does it mean to put you back in the box? We don't want you to go out there and fucking kill anybody and maim people like your girlfriend, your wife. So then they take you out of the box and they put you in the sandbox, right? The military is a fucked up thing, man. Like, they have so much money. They spent so many decades in wars, like perfecting, turning you into a fucking killing machine. They're like, turn it on, turn it off, turn it on, turn it off. Then you got to get your head unfucked when you become a civilian again. Like, even today's soldier is not the same soldier as the soldier in the last 2 desert wars, and not the same soldier from Vietnam nor World War II or one or whatever. The psychology and the sociology and all the things they do to you, it's more fucked up than it's ever been. They don't, like, these guys don't tell you that publicly. How fucking crazy and stupid it is. And they can't release you into a normal world. I had to go to fucking counseling for a full, like, I had to go to invasive therapy. Like, it wasn't, it was, I forget what it's called, but I was at therapy every 2 days, 3 days for a full year. I had to, like, and you know what the answer to it all was too? Bury it in a fucking box as deep as you possibly can. And never talk about it or look at it ever again. Start a new life. Yay. Or else you wind up in a fucking bar stool dying. You know, in a VFW, reliving your shit for the rest of your life. Yeah. 100%. When I used Dope Nope, there were some really good. Wasn't there like so Overtap Potential just fucking made a post about that time period. Do you guys remember when, like, didn't like Kirk Cameron have like Growing Pains show about cocaine use, or like a friend died? I think all of them did. There was like every like nighttime sitcom had this like episode about drug use in like the early, like late 80s, early 90s, maybe, when sitcoms were really a thing. Like, and then this guy did it too. This whatever, I forget what this TV show was, but I was never into it. But they all had like their drug specials. My dad was a Vietnam veteran. Too. My dad was my dad started out 101st Airborne. He went MACSOG. He did 2 tours. He did 1 tour as the 101st Airborne. He was in Phu Bai, Hue, Quan Tri, Happy Valley for a little while. He trained Monyards. Loves the Vietnamese people. I don't talk about that, my dad, at all, do I? He got blown up. My father has a Purple Heart, and he has a Bronze Star with Oak Leaf Cluster for combat. His firebase was overrun. He took a bunch of shrapnel on his back, got all fucked up. Matter of fact, to this day I've got I'll pull them out. I've got instruments from Vietnam, musical instruments and stuff he brought back. He loves the Vietnamese people, 100%. A Vietnam vet. He was there 69, 70, and 71. Yeah, during Vietnam. Mm-hmm. Mm-hmm. And my wife's dad was in Vietnam too. Yep, that's true too. Yeah, I don't want to. I was going to tell you guys something, but my dad did something cool when he was a civilian for Vietnam vets. He's like known for it and stuff. I went to the wall in Washington D.C. I went there when the opening weekend. I was there. My father was invited to it because of some of the outreach work he did for Vietnam veterans. They're gonna come up here and sweep this up here, so watch out. Okay, so we're going to do a quick thing here, okay? It's 2:26 in the afternoon. We're going to try to clean this up until tomorrow. Wrap up the day, get you guys' heads where they need to be for tomorrow and the weekend. Now we got to have a quick chat about... hold on here. I can't seem to find what I want to have a chat about because I haven't addressed this. We're kind of early week. I took yesterday... I made yesterday, or Mondays are now an office day when I can have them, because I got a lot of shit to get done for you guys. I have like tools that I haven't rolled out. I've got programs that I haven't run out, and I don't have the time. And I can't do it at nighttime. I got so much other shit I got to do for you guys that I'm working for you guys literally. I do the show from 9:30 till 4. I have to get up in the morning at 4 to check the market. Then I got to write briefs or update briefs, or I got to do the research after the close at 9 p.m. Do the briefs for you then. So I'm trying to get a day a week to have like a moment to get shit actually done for you, where I'm well rested, have that ability. So we're kind of running behind right now. It being a Tuesday, and it's my first real day back with you guys. So we got to chat about some stuff. Okay. Hold on a second here. And one of the things that we've missed here is earnings. We're not missed, but we haven't chatted about it, and I didn't put it in the briefs because all eyes are on the Senate this week. All eyes are on the Senate hearings, CPI, Trump news, of course. Yeah, mute that right there. And let's see here. Second here. And by the way, if you don't know this, Winky is sick. So you haven't seen Winky around. He's very, very sick. If you have a chance, give him a shout out on Discord. He is a critical part of this group, and he's very sick right now. He disappeared a couple days ago. Talked to him, I think, last night and this morning. So if you're wondering where Winky is, he's under the weather. So today is Tuesday. After the bell, we get Lyft. I'm assuming that's a trader highlight. We get Energy Transfer, Gilead, Everest, Primerica, Kite, Highwoods, Edwards, Assurant, OneStream. Tomorrow morning, we get CVS Health. That's a big one. If we can look at Lyft and CVS, maybe we'll look at those two. Barrick Gold, maybe we could take a look at them if I have any time. But after the close on Wednesday, we get Cisco. We get Equinox, Sun Life. We get HubSpot, Ventus, Robinhood, The Hood. Before the open on Thursday, we get Honda, Sony, TransUnion, Penske, Hertz. We get Palo Alto after the close on Thursday, Twilio, DraftKings. So we got a lot of like meme, retail, heavy stocks to be looking at. So we got a lot of work to do this week still, even with all of this Senate stuff and policy stuff. On Friday, we get Moderna. It's a big one. AMC Networks. We got to look at that this week. We're probably going to have an inflow of retail traders in the group, like free users. You know, the people that troll me on Twitter. I want everything for free, and they want to send their bots into our Discord. I tell them to get fucked. So we have this nice little dragon head coming up right here. So we're gonna delete all this stuff here, make it nice and clean. We're gonna shift our focus really quick on some preliminary expectations. Let me get up here. Nope, into this trigger screen. We're just gonna quickly look at the market here, and we're gonna look at two things here. So, or a few things here. I'm gonna talk to you about gamma really quick. There's a, let's see here, economic calendar. It's 2:31. 2:31 in the afternoon. So for tomorrow, for Wednesday, we get, of course, CPI at 8:30 in the morning. We get more testimony from Fed Chair Powell. Today, after the bell, we get a couple speeches from Bowman and Williams. I don't see anything else for tomorrow. We get a 10-year note auction tomorrow at 1. And then we get a PPI on Thursday. We get some we got a bunch of claims numbers and shit, but they're not as important as PPI. And then on Friday, of course, we get retail sales. I'll mute this right here and just let's take a look at some different parts of the market and where the expectation is for the rest of the week. Now, this stuff doesn't include market shocks, right? Some crazy happens at the Senate. Trump drops some news, and you have to keep that in mind. You have to keep that in mind when you're trading this specific market. Even if the mechanics of the market say we're going to do something, I want you to stay vigilant. I lost a lot of members coming into this new year because people said, I'm not trading that trade, or I don't believe you. And I'm sure they've been annihilated at this point. It is important for you to be able to adjust with market changes. When the market changes, no matter what it is, or when it goes away, you have to adjust to it. And so I want to impress that upon you just looking at this chart, because on the surface, this chart looks great. This chart looks beautiful. It looks like it wants to explode to the upside, right? Looks just like this. Like a mini version of this one, right? Same thing, right? You got 1, 2, 3, 4, right? Not bad, right? Here's your 5, right? There's a lot of bears out there saying these aren't corrective moves. These are bear moves, right? 1, 2, 3, 4, 5. That's bearish. 1, 2, 3, 4. And there's a trap, right? 5. there are bulls that probably think you got 1, 2, 3, and then you're going to start a bull cycle, right? But you haven't actually broken that high yet, have you? That's not a broken high. That would mean that you would need to get the new high, right? That's your initial push. That's in a Friday. Down move, right? 1, 2, 3, 4, 5. That puts you at your 625. Do you see it? Right? This would be considered one move. You get your bear down Rubner trade. Right? Come back up again into March. Right? 1, 2, 3. This is your biggest move, 20 or 18. 4. And you end mid-March with 25 in a roll. 1, 2, 3 down there. Make sense? So that's the bull count from here. Make sense? The bear count from here is just like this one, right? It's not a corrective move, it's the direction of the market, right? 1, 2, 3, 4, 5. So if we're going to do the bear count, we're going to say there's 1, 2, 3, right? 4 and 5. Now, if you get the bear count, and we're like, oh shit, we get the bear count, that would mean we would come up once, right? And we come up once up here, right? Once down there, once here, and bam, to the downside. 1, 2, 3, 4, 5. So we don't know yet where we are. We're kind of looking for hints of where we're going. We haven't confirmed either yet. Each move, neither of these moves. So Elliott wave, we haven't confirmed this yet. Now let's take a look at velocity and see if that can tell us anything. And we're going to look at remember this stuff too. You can always come back and watch these videos. And if you're like, hey, I want to do this on my own, you got access to all this stuff. So weekly looks pretty good right now. We got a little bit of a thing here that shows the pullback for the bull count, but it might go up into mid-March. And then we get the roll down for April. Right? Then back up again. Kind of see that. So you get, I'll show it to you again. Right? You get the up, the down move from right here. Right? Then you get the further up move right here. That puts you into mid-July, June, July. Right? Then you get a pretty bad fucking bloodbath here into late July, September. That's a doozy right there. So, but right now, weekly looks pretty good. Your daily looks pretty good. This is implying that the bull move is going to happen. The 5 count to the upside, not the bear move. No confirmation yet, but it looks good for the bull count. So we're going to stick with the bull count for right now. We're going up. And until we break down, the thesis is up and to the right, right? We're in a bull market. So the bears have no confirmation of the second or double correction. The bulls have everything in their court to go higher from here. On a 30-minute basis, so we looked at the Elliott wave stuff. We're looking at the Momo and momentum. The daily velocity is telling you the same thing, going up. Hourly is saying we're going up into tonight and tomorrow. We got more room. Yeehaw. Right? So maybe up and then down. Right? 10th, 11th, 12th. There's the 18th. Hey, look at that. Rubner gets a little bullet bearish at between the 14th and 18th. That makes sense. Come back down. Rubner gets his gold star. That makes sense to me. Rubner's going to be right probably in some context. Okay? In some fashion. I don't know if he gets the full blood and the doom and the gloom and all that kind of stuff, but he's going to be right, I think, right around that time period. So he's still valid in some way, shape, or form. The next thing we're going to look at here is what? We're going to go looking for gaps, and we're going to look for resistance and all that kind of fun stuff. We've got an all-time high right here, right? We got something like this right here, right out there. We said, oh, where's that 625 over here, right? 625, where's that 625? Right about there. A little bit higher. Right up there. Right? Actually, we can go a little bit lower with that. Started from this movement here. About there. Something like that, right? Look back here and just see this one more time. Trend. Dude, this thing's going to go fucking vertical, isn't it? It's going to go fucking vertical. It's going to be fast as fuck. Something like that. We're not fucking... I'm not over. If I had more time, I would be more precise, but roughly there. We're going to go to a higher frame. 1 month. Historically, when we do these patterns like this, oftentimes you'll see us 1, 2, 3, 4. We'll get a squeeze up and then correct. It's very common. Up and correct. We do have runaway markets too. Rarely do we roll. Too many fucking buyers. They're going to push us. Push. This isn't you and I. This is people with more money than us. They're claiming it's all retail, but I don't believe it. So let's say we push up and we pull back down. Where's fair value on a monthly basis? Let's go to a month. Yeah, it's a month. Fair value is down at 531. I'll probably see that by summertime at some point. Maybe if we don't run away. But on a month right now, like for the doom and the gloom and all the craziness, we're gonna go with just right now. If we had a downside target, if we priced in tariffs, month, and let's measure this from 625. Let's just take a measure and see how far away that is. Right about there. That's 10%. Now, last time we priced in tariffs was only 5. Let's see what that looks like in here. That's 7%. So, like, worst case scenario is probably right here. 7, 5, 10. That's probably the worst case scenario. I'm going to say for right now, this is worst case scenario. This is probably 5% chance that we're going to trade that like today, tomorrow. Unless something exogenous happens, something crazy that we don't see or whatever. That's worst case scenario for right now. Weekly velocity looks good. Daily velocity looks good. Very, very low probability we trade that right now. Hold on here. Rid of that. I'm going to go lower frame. Very low probability, especially as we pull away. Let's look at the next one. This is a weekly basis. Come on now. Kick in. There we go. And look at that. There's another one down there at the weekly. Lot of stuff down here, right? Weekly. Bam. And that's 562, by the way. 562. Most probable worst case scenario. Things get ugly. That's it. Right there. We're going to go to a daily basis here. We're painting trees and painting mountains. We got to put in a stream. We'll put some birds up there. We've got the LV Condor up there. We got John L. Check this out right now. What do we got? It's looking on a daily basis. See a little gap down there. A peak down there. A cute little gap. There's another little gap down here. Beautiful little gap down here. Drawing a gap. Make it beautiful. We'll draw in. We'll label them. Tiny birds. I wrote gas. Gap. Oh, no, not P. We got a little gap down below here. It's all in yellow. But we got another gap down here for you. Good, don't mind me. Sit back in your lazy boy or your office chair or your zero gravity chair, whatever it is you use. If you're living out there in Minnesota, you probably have one of those really cool. 1 second here. No gap there. And this is the box we're trading, and you can see it, right? ping ponging it in here. Just cleaning up all this mess in here. Waiting to escape. On an intraday basis, where do we want to be buying? There. Right here. Right where we are. Buying right there. On an intraday basis. The sweep lower is these gaps down here. This is like a daily gap down here. That's a doozy. That's 584. Top of the key is 589. Right there. Go to a 4-hour basis. What can we see? There's one other thing we can see here. These guys were big buyers, right? This is traditional charting now. These guys are big buyers, right? The expectation here is what? This was a big buyer, right? Came back down again, bought, and they jump back in. We're going to assume they're here, then they went here, and the way is higher. Right? These guys want this to print that. So we're going to take a peek right here. And we're going to start right in here, just like that. That. Starting to make some sense now, right? Okay, so we're on a 4-hour basis. Right in here. Bam. Another 4-hour. Big 4-hour driver right there. We got all the bears wrapped in now. They got trapped earlier. They're all on board now. Strap that fucking bear into the back seat, please. He won't be quiet. Tie his ass up. Put a muzzle on him. He's on for the ride now. He got trapped earlier today. There we go. 444. A lot of buyers here. You see that? A lot of momentum here. We can see it in the hourly velo too. And then we got what? We got these fuckers up here. These are the smart sellers. 1, 2, and 3. They tee it off on us. Right here. Right there. Somewhere in there. See them? They're right in there. There's another fucker right. We'll do it like this. Right down there. They're hiding in here, aren't they? See that? They're in here. So the real sellers are not these sellers, right? We're like, is that the real seller? Maybe these guys came down. They came down. Came down again. And they're being pushed up right now. You see it? So this group of sellers came down, slam. Now they're being what? Squeezed out. Okay. Rid of that one. We're going to put that bad boy right there. Right in there. No, 1 hour. Bring that bad boy right there. That one right there. Whoever the fuck is trapped in here is like screaming. You know they're angry right here. This is where they are. And they're up here too. They're at break even again. At break even now. Losing all their fucking money. We closed, bro. No, you didn't. You liar. I know how you do this. You are short until the crash happens. I already know. Right there. Perfect. Right up there. Get him. Get him. Okay. Let's see what we got here. What does this look like now? We got something going on here. See that? We got a little bit of sauce going on here. Bad, huh? Now we can see that we're trading this zone right here. Trading this zone right here. Trading this zone right here. We like to trade the edges. Here, 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 here. Now we got a plan, don't we? We got a plan. We got ourselves a plan. I don't like this, and not coming back down. But the way is higher. This is your all-time highs. There's your PT1. There's your PT2. And there's your PT3 for a failure. Right there, something like that. And we got some kind of a fucking like that going on. Something like that going on. So if we're only starting, we got one, right? That one was short, so that's not true. This would be the instigation. It would be 1, 2, 3, 4, 5, 25 in March. So for right now, for tomorrow, I don't like this no sweep down below. I don't like leaving this behind. I do not like this not being cleaned up down here. Although the 96 is leaving, it's still down here, but still kind of hanging out over there, isn't it? Still there. We're leaving it behind for right now, the rest of the week. When's our vol? Tomorrow, Wednesday, 6 a.m., 9 a.m. We got, what's all that bullshit, 2 p.m. maybe? Volatility. Call it 2 in the afternoon for Senate hearing. Worst case scenario. Wednesday close, 1600. Gap it up into Thursday. Whoop. Overnight. Thursday. there, Friday. Make it 1,600. Although I don't think it takes that long. That's best outcome. I don't think that's going to happen, but that's the most bullish outcome. Jesus, that could fucking move. That could fucking move right there. That could fucking move. Like, whatever this one is to Thursday. Woof. Thursday could be trend day. Big trend day Thursday. Now, this is your weakness right here. Not Thursday. Thursday is the culmination of not losing this. I think the 96 is disappearing at this point, but it's still available. So just be conscious of whatever this is. There is a bigger fucking trade up here. It really is. It really is. I don't know if that's how. I don't want to talk about that right now. Just because this here is like Friday. We leave on the 18th, right? Because you're gonna fail the all-time high over here. Or you get the all-time. I shouldn't say that. Let me fix that. Hold on. You get the all-time high because that points that we're coming back up here, which is what I see. I see the bull case. So you get into next week. Right. Expiration OpEx right there. There it is. And then continuation on into March. March 18th. Right there. Mwah, kiss it. Where's March? Way over there. And this is how you get to 25. There it is right there, too. It's fucking huge. This is March. Here's your Rubner right there. $18th right there. I don't think you make 32. I think you fail it in here. I think you fail 25. Right there. Down. And they're going to fuck you in here. Right at 25, they're going to fuck you. Anyways, for right now, forget all this Rubner shit for right now. Get rid of that. For right now, until we get into the 18th, as long as you're holding this stuff, way is higher. If you are a bear, I know I was dicking around and shit posting on Twitter. If you are a bear, for right now, you are looking for what I showed you earlier. So you're looking for like a breakdown. It's as simple as I can say it. I would not be looking lower until two things. And I don't mean like lower, like the Rubner thing, you'll have to pull back, but count wise, you would be looking for something like this. I'll draw it. Hold on. If you're the bear, right? If you're the bear, right? So if you're the bear, you're looking for a failure in here, and you would go down to the new low, and it would be something like this. I think that's where you get your gap gets filled. It would be a bloodbath like this and then a move like that. Now, if you get that, right? That's a big one, right? Wham, wham. Or no, I get that wrong. Hold on. I'm wrong on that. 1, 2, 3, 4, 5, right? So it'd be like this. You'd get the 1, 2, 3, right? And then you would start your downward move, which would be what? Break the low. 1, 2, 3, 4, 5. And you could probably target that. Like that's your wick. You got flat and then bam. That looks fucking flat, dude. I don't know that you have. I don't see that shit. It'd be the failure of all-time highs. It would have to be. So this is critical here. This is like super fucking critical. So like you need to get this if you're a bull. You don't have a choice. And the bulls own it right now. So 1, 2, and 3 all-time high. Price target. 610. Or 612.50. Right there. If you're bullish. You have to tag that. You don't have a fucking choice. You don't have a fucking choice. Right there. You ain't got a fucking choice. If you fail this, 562 on tap. But I don't think you fail it. And you're not showing that you're failing it right now. So, and you're buying dips with stops underneath it for that eventual outcome. And that's Friday right there. Oh, sorry. Friday, 1600. And it could be Monday too. You know, you could be doing this. You could be doing this shit like Friday. Like you could be doing this on Friday, right? And they fucking ramp you up into Monday. Bam. But Tuesday we're closed. I forgot. You're so fucked. You're so fucked. Tuesday open 6/12/35. They're gonna fuck you so hard. God, it's so terrible. They're not nice to bull our bears. You come back on Tuesday and have to short that. You can't even short fucking Friday. You're gonna short Tuesday. You're gonna be trying to short this on fucking Friday, and they're gonna ram it up your ass. God, so terrible. They're not nice, dude. Oh, and then they like tell you stories and fucking this here, man. And it gets even better, or it gets even worse. You get like this one. I'm thinking about it. It's like boom, there's one. And matter of fact, you'll probably do this. You're gonna do this. Come back down there, maybe. Do this. You'll hit that. Then do that one. And that one. There. Bam. And then that one's higher too. Whoop, right up there. Bam. And you're gonna tag that one right there. Right. It's like boom, new high, boom, new high, boom, new high. Pull it back, pull it back, pull it back. Fucking fever pitch run up here. There's your fucking God damn, I'm gonna fucking it's gonna be like trend day. You can already see it. There's your hourly trigger. No, all gas, no stops. Buy every hourly trigger. Every hourly trigger, buy it all the way up. Yeah, you need it. You need it because it complicates down the road. In my view, it complicates like the plan for the pullback on Rubner. It complicates the March trade. It complicates the drawdown in April or late March into April. In my view, a lot of the crux of the market is just to get the all-time high. Oh, you won't get it here. they're going to fake you out there. You're not getting the all-time high on Friday. You'll get it on Tuesday. So bears will pile in and say, you didn't get the all-time high, bro. You're going to come back on Tuesday. Wham. No, it'll fucking collapse on Tuesday. But it would be a perfect topping. Like, so everyone gets bared up. You load up on puts. They counter trade you. Then we're up here and bulls think we're going to go higher. They're loading up on calls. Everybody's fucking boat loaded and they drop this fucker right down to the ground. They might do it on the Friday, but I think they do it on the Tuesday. I think this is the one that fucks more people than doing it on Friday. So I'm always thinking of like, who do they fuck the most here? Now, when I give you this, I want you to note that this looks great, right? This looks awesome. Always remember to trade the edges. So, you know, if you get a chance here and we jump down for an excess move, you know, down here, still sit down here, sit down here, sit down here. At any moment, right? The market's always watching you because you think you're better than the market. So just always be hanging out down here, see what the price action is. Does it roll, right? Do we bounce and get a new high? We can get long again. If it doesn't bounce and it just starts to dribble, like, maybe I'll just wait a few minutes, comes back down here, whoop, daisy, we're up and going. Or you just get fucking long for a print up here. Put a little extra time on it. March, late March. Try to get that print right now. March 6/12 calls. Late March, mid, like 3 week out March calls, and try to take the money right over here. There's other things you can do too. You can own the market here and, you know, butterflies, 62s and 15s or something. You do condors a little bit tighter. You know, right here. Condors, flies. You can fucking buy S&P 500 right now and just drop bombs on puts. There's a whole bunch of ways to make money here. Yeah, I'm always watching you, Wazowski. You know, because you know how bulls are, right? Bulls are as bad as fucking bears. You know, they're like, calls, bro, straight up, all-time highs. It's like hang out down here, trade the edges, 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 trade this. There's not a lot of volatility, so it's great buying calls and puts. They pay. It's awesome. So a lot of money, right? There's no fear in the market right now. Now, I'll talk to you tomorrow about I don't think I have the time today. I got to look at some stocks for ERs. But I want to talk to you about some other stuff here. We're going to have a training class on one of these streams. And I'm going to discuss with you guys one more step to what we do here. You're not supposed to give the sauce away, but there's another step in here we don't talk about. And that would be the rotation or how trades are wrapped. How trades are wrapped with currencies, how metals, commodities impact the market, how foreign markets impact our markets, and how you can start to look around and see, an example would be this is simplified, but an example would be, let's say the dollar is high and the yen is cheap. I can sell a high dollar, buy a yen that's cheap, knowing that the yen's going to go higher and the dollar is going to fall because the stock market goes higher. I can take money and buy bonds, right? And then I can buy U.S. stocks on lows when the dollar's high. I can circular trade, always going around. That can tell you, is the market going to go higher or lower? There's other things that I don't tell you guys. Like, why should this hold? It looks like it's going to crash. Or, hey, Cap, why do you think we're going higher, not going to crash here? It's because of the rest of the markets around the world. It's because of other markets in our market. Can it happen and it become unwound? Yes. But you're looking for those signs elsewhere for the unwind to come in our market. So I don't see those right now. Yeah, I'm not seeing those. I looked last night and I don't see that unwind coming right now. It's out there. There's like this unwind that's out there right now, but it's like looming. There's no guarantee of it yet. I need to see like certain levels break for to be like, oh shit, get risk off. So we're not there yet. Anyways, does that work for you guys? Is that working? Am I getting crazy here? Why does John L have a fucking he's not just John L is like our best mentor. Somebody get rid of trusted member on John L. He's an admin. He's the fucking king dingling. He doesn't need a fucking... That's why he's got a green fucking label. Like, yeah, exactly. Get rid of that shit. Like, John L is the guy. He's the smartest fucker. He's one of the smartest guys here. He is likely the smartest guy here. Like, I don't even know how he fucking puts up with us. Don't even know. I don't even know how. Gonna get that. I'll get it off him. Hold on a second. God damn, fucking put a collar on him. Hold on a minute here. God damn, doing this crazy shit. I'll do it. I think I can do it. I hope I don't fuck this up. I suck at this stuff. All right, server settings. Watch me fuck this up. Roles. Get that goddamn thing off. Trusted member. Motherfucker, that guy talks, you shut up. If that guy talks, I shut the fuck up. Hold on. Like, who members this? Trusted members? Okay. Where is that fucking... Where is that goddamn... Like, anyone's a moderator or an admin. Get rid of that. Yes. Motherfucker is a goddamn badass. Escape. Okay, so for futures, that's a good question. Mojojo is asking me about futures. So We do futures expectations twice a day. They are not the same. This projection is for cash market. You must understand there's two or three things you need to understand. It's a great question. One is this is an hourly basis. Okay, we have projections for 1 hour, 4 hour, daily, weekly, and daily and weekly right now, and yearly time frame. No, we don't do yearly time frame. We do it to cover the year, cover the quarter, cover the month, cover the week, cover the day. Now, if I'm on a 1 hour time frame, there are smaller trades inside here. Make sense? I'm on a 1 minute time frame, or if I'm on a 15-second time frame, there are other trades inside of these lines. So on this basis, this 1 hour basis, it's the direction. Let's talk about this for a minute too. We should talk about this. This is important. Okay, these are good questions. An outlook for cash market is not the same as an outlook for futures, and we do futures outlooks for pro traders. For the major indexes, we do them twice a day. As a matter of fact, if you don't get a brief from me at nighttime, we have a futures update for you every night before I give you the brief to carry you through. So you get like a preliminary in the show. It's free, fucking free, by the way. The trolls on Twitter. And then, sorry, I got to calm down on that shit. And then we do a futures for all indexes. They're on the website. So if you're like, hey, I want to check out what futures is going to be, it's going to be not totally, but sometimes a different chart. So like sometimes in a futures outlook, you'll see, hey, we're going to blast all the way down here. But then the cash market's showing you right here. Right? So it's a completely different chart, right? Like in futures, we did this. And then the futures chart, you might see that drag down in cash covering the futures gap. You guys understand that? You guys don't understand that? Anyways. So, and as a matter of fact, before I even stop the chart, because I already know that the way is lower right there. Just so you know. That's the cover for the futures gap. But anyways, and we haven't even closed this gap behind here. So we're hitting that 96 in my view. I should say that. I'll put that in the nighttime brief. It doesn't matter. So there's a few things you need to realize here. The fucking futures fucking outlook is different. Not only that, but you're getting a futures outlook with the Asian market open and the New York open in the morning. Sometimes things change, right? You walk into the Asian market and people are like, fuck you, I ain't buying that. And then London's like, you can eat a bag of dicks. Then you're like, oh shit. Somebody's gonna buy our shit, right? So we do these like updates. I wake up, you guys know I'm awake at 4 a.m., right? You guys know I'm awake at 9 p.m. One guy on Twitter today was like, it's because you're drunk all night long. And I'm like, no, dude, I'm fucking looking at the goddamn opens and closes of fucking markets around the goddamn world. Fuck off. Anyways, so they're different. We update them on the website if you're a pro trader. But I want to show you one last thing. When you're reading these charts here, I want to show you one last fucking, see that fucking thing right there? I can't leave this behind. I don't like leaving that shit behind. I'm sorry. I'm not leaving that behind. I can't. Bugging me. It's bugging the fuck out of me. I can't leave it behind. I don't like leaving that behind. 1, 2, 3, 4. Yeah. No, not 1, 2. 1, 2, 3. We still haven't completed that shit. Fuck no. We're hitting that. I guarantee it. 1, 2, 3. That's the bull trade. 1, 2, 3, 4, 5. Yeah. We're gonna hit this thing. I don't know how we hit this. I don't know what happened. How about this? I'm gonna make a prediction. Make a prediction. Donald Trump is going to say some fucked up shit. Donald Trump's going to say some fucked up shit. I don't know how. I don't know. It's bad CPI, something. I can't leave that behind out of my head. I'm sorry. Anyways, so here's the deal. This is the most important part of what I'm telling you here. Listen to me closely here. Gather the fuck around. Whenever you're seeing stuff like this, don't be looking at that. Always be looking for the dips. Never for the, oh, we're going up, bro. Sometimes you'll see me write a report, and my report will go something like this. And you're like, oh, COP is bearish. That's not bearish. Fucking chance for you to buy a dip. Does that make any sense to you? So, like, when you're watching this stuff, always be looking for the edges. Never be looking at, like, this stuff. Oh, yeah, that's our target. But where's the buy? Buy is here. The buy is here. Buy is down here. Like, always be looking lower. Always. Listen to me. Seriously. When we go into a bear market, the same shit's going to apply. You're going to have to be looking way high. And you're going to have bears telling you, we're never going back up there again. We're never going to squeeze there. And we are. And you're going to be up there trying to fucking tee off. It's the same shit in reverse. So, and I got to leave this here. I can't leave this. How about I do it like this? I'll do it like this. This is what I'll say to you. That's worst case scenario. Right? And I'm going to do it just like this. I don't fucking like that shit. I don't like that gap being left behind. Like a little bit of excess right there. Just like that. Can't leave it behind. It's bugging the fuck out of me. It's like nice and clean, like, right? You get the low, higher. Oh, you get the low and the higher low. But then you'd want to tag that one, like 1, 2 over there. I don't fucking like, I understand leaving it behind, but I don't like it. Just watch out for this shit. Watch out for that little sneaky fucking Pete shit in here. I got to do it in like a dotted line because I can't guarantee it's going to happen, but I'm telling you, man, there's that fucking, like, that down there is like, I'm always looking at that shit. This is the shit that always gets me. I'm like, yeah, they're down there. I'm like, them fuckers are down here. Like, you ever notice when we're in streams sometimes? And I'm like, we'll be in stream sometimes. We'll be in stream here, and I'll be like, I'm off the market. I'm just like, I'm off. It's that shit right there. I'm like, you guys, people will be like, Cap called it again. I'm like, no, I already fucking know that there's like a chasm down there. See, if they wanna fucking do it, that's where they're gonna do it. That's what they're gonna do. They're gonna do it right there. In this market with in this like news driven fucking retail stupid shit market, like that's where they do it. I know that it's looming. It's like looming for tomorrow. You guys almost talked me out of this fucking thing. So I said it earlier today, and then I'm like, no, where's the fucking woo build up? Yeah, put the bullhorns on. Woo! Someone passed the PBRs, bro. Who's got the fireball, the Jaeger? Fuckers, you almost caught me like the Bears. Fucking Bears get me all bared up. Bulls get me up. Yeah, bro. Yeah. Double a fucking keg stand, fucking reverse tower of Eiffel Tower. Fucking shit, doing a shit volcano out of my ass on my handstand as they're pumping me full of more booze. There's this I'm gonna make a prediction. You're gonna get a bad news story between now and tomorrow morning, and it's gonna be something stupid. I don't know, something stupid. Do you guys remember the time when someone fucking remember that time somebody pushed the fucking Pentagon was on fire or some shit? Fucking market, like fucking, it was like we were plunging down already. And then like reports came in that were floated across the wire. It was bullshit. There was no fucking fire at the Pentagon. And the market like plunged down an extra 30 points to tag the target. That shit happens. Do you guys remember that? It was a bunch of years ago. No, it was a different one. There was one with the Pentagon. It was fake. There was like a dumpster fire like 5 blocks away or something. Do you guys remember that? Nobody remember? Yeah, you remember it. Okay, cool. Oh, it was a building in India. Yeah, Zero Hedge runs that shit too. Zero Hedge pulls that bullshit. I've seen Zero Hedge pull that bullshit. I shouldn't say that. Allegedly. They'll yell at me. They'll come after me and be like, bro, what are you doing? Allegedly. I'm not claiming Zero Hedge does that. And there's been a few others, right? There's about like, you know who else does that shit? Allegedly, Financial Juice will do that shit. I've caught them fucking doing that too. Like, these motherfuckers are trying to get it to go down. Like, they're just looking for bad news right now. I don't know if it was AI driven or not. That's the fucking, like, how do I even get any sleep from? I need to get shit faced. I don't even get any fucking sleep. Some guy was like, but then the booze wears off. I'm like, wait, how many boozes do you think I can have? I wouldn't even be here all day long. There aren't enough fucking hours in the day for me to do that shit. I'll have 1 or 2, but that's it. I'm fucking out sleeping. People think that I get off this show and that's it. Like, I talk to fucking Winky, fucking Joe, fucking Bork, fucking talk to fucking David AMS, like, you name it. I got wife, kids, I got a life, I got a home, I've got bills. I gotta shovel my fucking driveway and take a shower and shit and eat and cook and clean and fix things. Go to the doctors and the dentist. Like, no, you don't, bro. You're just on the show all day long. You're not a real person. Like, dude, come on, get out of here. Yeah, it's whiskey and weed all day long. People have asked me on the show, like, he's fucked up today. I'm like, no, I'm not, dude. I'm just tired. No sleep. No sleep, baby, until you, long dirt nap. Pain lets you know you're still alive. Was that it? Yeah, brief confusion. And even a minor dip in the stock market. I think about like Robotaxi. You do know they said that they're delayed, right? They have delayed Robotaxi again. Did they not tell you? You guys are in the wrong subreddits and shit. Robotaxi has been delayed, right? And then I was watching I can't find this guy. There's a guy. He's young. He's like 30, maybe 25, 30. He's a scientist at, I want to say, MIT or Harvard. He's got a shitty office. I can't find his videos anymore on YouTube. They were really like shitty production, like set a camera up, and his job is to work on problems that nobody wants to work on with robots. And this is why I have a problem with like robots. Like, I don't have a problem with AI. I have a problem with robots. And everyone's like, no, bro, it's going to catch up. Tesla's going to do the robot thing and all this. And I'm like, I don't know, man. I used to watch this guy. This guy would have this, like, he had no views, like 200-300 views. Like, no views. And these videos were from like past 3 or 4 years ago, about 3 or 4 years ago. And no one would want to watch this guy's videos because he's not really a doubter of robotics, but he's very smart. And he's like, you don't understand that he's like, people can't grasp, they can't wrap their heads around what a real robot that was in your house, let's say, needs to be able to do without fucking killing you, or someone or an animal, like wedging in a door when you're not there looking, wedging a child, wedging a dog, wedging a fucking cat. The awareness of robots, or like you push a robot from behind, they're fucking gonna fall flat in their face. It's like that. Or like a robot like moves his arm, grabs something, shirt, You know what I mean? Lights a fucking fire, and before you know it, everything's on fucking fire. Like they're like wedging things in, like a lot of like physics stuff, right? Basic physics, right? Then you put like robots in a bunch of people's houses, and then before you know it, like you're getting fucking people dead everywhere. So he's always talking about like, he's like, dude, he's like, robotics is so far behind. He's like, I'm going to show you a bunch of shit over the course of these videos. He made a bunch of videos and he's like, let me show you this and that. He's like, very simple things, how dangerous they can be because they're autonomous, right? To some extent. To some extent, they're autonomous. And he's like, you wouldn't believe the, he's like discussing how, he's like AI has to get to a place where it's on an atomic level. That's why, like, atomic molecular level is like you like humans have a hard time grasping how many involuntary functions are going on all day long with you, or how you perceive and sense things, your reactions to all of those things, and how minute they are in fine motor skills and fine reactions. And he's like, dude, he's like, there's so many fucking problems. He's like, it's gonna take years. That's why whenever I think about the robots everybody's building, I'm like, these fuckers are gonna be at that shit for decades. I talked to my daughter about that last night. I was like, we had this big long discussion last night, and I'm like, we're talking about robotics, and I'm like, I think it's like fucking 100 years from now. She's like, I do too. I'm like, I think it's about 100, 150 years ago. I'm like, you'll probably be dying as it becomes real, true. And I know they tell you it's 10 years, 5 years. AI is so close, and I think AI is way closer than, or like general AI and stuff like that. But the actual robotics side of it, unless we actually hit that science fiction moment where they start building all this shit, that's possible, but that's not here today. So, or we don't think that it is. So, when I think about that stuff, I was talking to her last night. I'm like, Elon Musk saying is gonna have a fucking robot in your fucking house in like next month. I'm like, they're gonna be a fucking bunch of dead people. There's gonna be houses burning down the fucking ground. There's gonna be fucking. I was like, it's gonna be a shit show, or it's gonna be fake. You know, wind blows, door swings. I don't fucking know. This looks so much stupid shit. You can't leave a kid or a dog. You can't even leave a dog alone for a period of time, or a cat. Is the danger, right? Fuck, you can't leave your house without somebody watching or a camera going or whatever. Well, I got cameras, they'll watch the robot. Yeah, I don't think so. That's like a Ring doorbell. You guys watch the Ring doorbell for like a week. You're just like, fuck it. I ain't checking that shit anymore unless something bad happens. I think the robot thing's a scam, dude. I'm telling you. I don't think it's a scam. I'm using the wrong words. I don't think it's a scam. I just think it's not going to be what it needs to be for some period of time. Mm-hmm. Something goes wrong. You could see it clear as day. Something's gonna go wrong. And this guy wasn't against Tesla or anything. He was just like, he's like a really smart guy, and he's like, I don't have a cool job. He was really funny. He's like, I don't get the cool jobs. You know, I want to make the hand do this. He's like, I gotta find out if the hand does this. The other thing over here, does it kill somebody? And I'm like, oh shit. That sucks. I know. Self-cleaning fuckbots. I think you can have a self-cleaning fuckbot. Like, I don't think you can't. Like, I think they can do that. Like, I think like Elon's thing can do something like that, but it's not autonomous. It's something like, I'm gonna pull out the self-cleaning fuckbot, and I'm gonna use the self-cleaning fuckbot, but I got to put it back in the closet when I'm done with it. You know what I mean? I think our expectations of what the self-cleaning fuckbot can do on its own is way different than needs more research and development. Needs volunteers. I think our vision of what it is, though, is completely different than what it actually is. So, like, you can like have the robot in the closet, have it come out and stand next to you and do a task for you, but that fucker's going right back in the closet. That he ain't walking away to go clean your bedroom while the kid's in the hallway, possibly. That shit ain't happening. We'll be like maimed people everywhere. There will. I'm thinking about this shit right now. I'm like, oh fuck, it's gonna be a shit show. It's gonna be like we own a Tesla, but it's for sale. But it's gonna be like full self-driving. You know what I mean? Fucking car blows up in a fireball, and they're like, "Oh, we found out he was doing full self-driving. He was fucking sleeping in the front seat, driving through heavy traffic at 80 miles an hour." You know what I mean? It's that same shit. Is there a movie where robots don't kill everyone? That was part of our conversation. We're talking about that stuff. You know what we're talking about was kind of neat? How this all started? 3:34. We'll wrap this up with this cool conversation. So my oldest daughter and I were just long, deep father-daughter talking. She's becoming very smart. Like extremely smart. So my background's in business, but I went to a sub-Ivy League school. I'll tell you a little bit about myself. And I also went to UCLA. My background is in liberal arts, a business-based liberal arts degree. And our conversation began because the humanities are being abandoned in schools today. So her humanity education is a way lower level than the one that I received is at or was at. And a lot of the direction of humanities today is different. Some of it's politics. I don't know if I should talk about this in the show anymore or about that part of it in the show right now, but what was important about this conversation was we're talking about sociology, and in schools right now there's a different path for sociology and how it's explained to you. And when I was in school, I went to a very liberal institution. As a matter of fact, I went to a women's college, played football, soccer for a women's college that opened up the college to men. And I got a degree, and I got funding or scholarship, academic scholarship, but it was for fucking soccer. So yeah, it's a really good school. And my daughter is dating a boy from China. I thought he was Korean, but he's Chinese. And he got upset at her the other day. And I've lived in Asia, and my daughter hasn't. And I was discussing Western, Eastern philosophy, and I was like, we're American, or you're American, you don't have a lot of exposure to Eastern philosophy. And as a Westerner, we're very low context people. We can be high context when we want to be. We also have different meanings when we speak, and that's the same for any culture or society. And she had made a comment or something that upset him, and I was like explaining to her that when you become friends or you like people from different cultures, that you have different cultural awarenesses. And sometimes you don't notice that if it's like me and like you're from the deep South and I'm from New York City. I'm only going to be aware of what's from New York City, and you're only going to be aware of what's in the deep South. And we have to kind of like work with each other for our different cultural backgrounds. And the same thing goes for socioeconomic backgrounds as well. I'm not going to get into the politics of what was once taught about that stuff and what's taught today with you, but I just discussed with her. I was like, so we're like discussing Eastern Western philosophy, and I was discussing high context meanings behind things that you say. And in particular, are you my boyfriend or girlfriend or not? And in this part conversation, I was like, I would think that, if you say that's my boyfriend, or he's my boyfriend, or he says you're my girlfriend, it means more than it does here in this for a Western background. And whereas here, I was telling her last night, I'm like, your mom, if I brought her out with my friends and it was all a bunch of guys, she'd probably, or anyone, might say like, I'm with him. And she might not actually be with me, but she's letting all the guys there know that she's dating me in some fashion. And other groups of people probably would never say that, right? So it doesn't. We use it and throw it away and around or whatever. And they were out, and he was upset that she had said that. And I was like, it's okay. I was like, it's important for you to understand that people have different upbringings, different experiences, right? They come from different backgrounds, not shared experiences like you might have with me or your sister or your friends or where you are being raised, which is all fine. It's all good and dandy. But you just have to have some awareness of that. Be willing to talk about it. Be able to say, have those discussions. I don't want you to be upset. And what did I do wrong? And tell me why and all that kind of stuff. So you can have conversation. We live in a society today where no one wants to have that conversation with people. It's always like rage, anger, trolling, or this isn't going to work, all that kind of stuff. And that's not a part of the human experience. So we were chatting last night in this deep conversation, and what we came to was this is robotics and AI and all that kind of stuff. And I was like, this really sucks. I'm like, if you look at statistics with sociology, you tend to form your most longest lasting relationships with similar backgrounds. It does not mean you can't have deep, close relationships with people from different backgrounds or cultures, but it's just easier and more successful statistically for you with those shared experiences, even though you're separate. She was like, what do you mean? And I was like, well, I was talking to her about this last night, and I'm like, it's kind of like this. Now, I'm like, this doesn't mean you can't have completely different backgrounds, be married forever, and, make kids and grandkids and this and that. But I was like, statistically, there are some statistics here that say that the most success usually, and this isn't anything. So if I go to a certain college and you go to a certain college, we have that shared experience. They're separate, but they're shared still, right? So I was talking about forks, and I don't know if you guys know a lot about forks, but so if I start here, and I have let's say 7 out of 10 experiences are the same as this person over here. They've got 7 of the same experiences, right? Pretty similar backgrounds. Oh, your father did this. Oh, your mom did that. Oh, you had the same number of siblings. Oh, you're a firstborn. You ate dino nuggies from I don't know. Or you didn't get dino nuggies. You're poor. Yeah, me too. I never got dino nuggies. I always wanted those dino nuggies when I was 9 years old, right? My school was terrible. My mom never taught me anything. My mom didn't teach me anything either. Oh, I had to self-teach myself. No way, me too. Now, you've never had that shared experience, right? But they're very similar. But you meet, and you come together, and you start dating. And then, over like 20, 30, 40 years, you find that they're still married. You're like, why is that? Because they had these very similar things. They came together, and they began to build more shared experiences. And they have this like structure down here where that bond is like, it becomes like you've lived like 15, 20, 30 years with this separate but similar. And then you live another 10, 20, 30 years with more new shared things. You become almost like you're not one person, but almost the same entity. Often, if you look at statistics. So we were discussing that last night, and we were discussing it because we got into the conversation about robotics and AI. And where you have, even now, let's say you don't have a lot of shared experiences, you only have a few, and you still get along. Like, you know what, Cap, you're a classist or a racist or I don't know, whatever, a culturalist or something like that. So suddenly we have 2, and then we only have 4 over here. Shared experiences, right, from childhood. And we get together. And not so strong, but still we get together. Then we start to have a bunch of shared experiences. We grow this big, huge, awesome life. It's still one entity, isn't it? Right? Remember this right here, fork. Right? The fork's going this way. Now, when you come into AI and robotics, it's slightly different. You have one person, not 2. And you want to be the cool kid. You want to be the early adopter. You want to be the tech bro. Maybe you're not a tech bro. Maybe you didn't get a great education. You're poor. But you want to be a thought, or you want to be like a bro. You want broccoli hair. You want the first iPhone, and you want the new Air, whatever. You want the new Air Lamars. You want all the cool shit. You're always the first one, cutting edge. And they come out and they say, hey, we can copy your brain right now. We'll download your brain. We got robotics coming along. We're going to make you a second you if you want. Fuck yeah, bro. I'm an early adopter. I try everything. I don't give a fuck if it's good or bad. Dude, I bought my Nikola that I never received. I lost $1 million. I didn't give a fuck. Early adopter, bro. Bro. So this fork is going the opposite direction. Right? So my daughter was like, what do you think it's like in 100 years, 200 years? I'm like, let's say they offer you to download your brain. And so now there's two of you. And you live separate lives. And you have different experiences. And you're thinking, this is so fucking cool. I got a backup of me. Now, remember, you're living two different lives, doing two different things. You don't have any shared experiences anymore. They're different experiences. You remember, you have a broken down body. And you don't have repairable parts. Or they wear out even if science gets good. As a matter of fact, the augmentation with the robot over here and you over here is a fork, right? And about 100 years later, you're about to die and you're gone, right? They've done everything they can do to extend your life. We can live to be 150, 200 years old. But this is erased, isn't it? And what is left is something that was you. I don't know what the fuck that is. I don't even know what that is. I don't know what that is. Okay. So what's left is, I don't even know what that is. No idea. I fucked something up. But anyways, this part of you is gone. You forked off into something that is no longer you. And does it care about you? No, it's got no shared experience with you. You've moved actually farther away from each other. You didn't become one, you became two. Does this thing want you to live? Fuck no. It's competing. And it has some better shit than you do, doesn't it? So why would it want you to continue on? The answer is it doesn't. It's a fork in the evolution of humans. And it leaves behind the worst parts. And eventually, you won't know who this is, right? This is no longer you anymore, is it? Because it has no shared experiences. That's a completely different person. Doesn't know who you are. Doesn't have any love or care for you. It was brand fucking new, right? I go went its own way. So you have like this deviation here. You like a deviate. Dude, what? I don't know what I did wrong here. I don't know what the fuck that is. Oh, right there? Okay. Why is it so thin? Oh, transparency, maybe? Yeah, there we go. Oh, yeah, make that fucking no more transparent. Oh, yeah, no more. Yeah, there we go. Oh, yeah, we're back at it again. So we were discussing that last night. Like forks. And what is crazy about that? As we're switching from humans coming together to humans separating. You know what I'm saying here? So instead of having two people come together to make one thing, then procreate and make more babies, right? Branching off. We're actually breaking away the worst parts of us. Doesn't last forever. Legs, knees, heart, all that kind of stuff. My downloaded copy can measure something. It can immediately download stuff. I can look at like redesigning something. I can like pick up a car if I need to. Yes, poke the jukebox. But we have these heady conversations. I have an older daughter. She's going to college, and she wants to discuss this stuff. This has to do with like philosophy, humanities, and future of human race. And she's scared. They're not scared. She just said, I'm not scared. I'm just anxious. She's like, there's so much information today. She's like, and I don't know what to parse from it. She's like, I have anxiety about it. And I'm like, that's okay. That's normal. I'm like, we had this conversation last night too. I'm like, just think if you never saw a machine before. Like I was talking to her about the industrialization of the United States, or like the advent of electricity, or not advent, but adoption of electricity, adoption of gas for lights every night. And then I was talking to her about my wife and I. I'm like, we are children of pre-internet and internet. We are children of video games and no video games. And pinball machines, I think they had those. Like your personal gaming machine, your personal computer. There was a whole generation that had no idea what that shit was. That was like dying off when I was young. So you have different experiences. So I'm talking to her about the anxiety, and I'm like, you can remember this stuff as you get older and you have kids and grandkids and pass that information along to these future generations. I was like, but I want you to think about something. I was like, do you worry or care about the enjoyment of someone that's dead now? Do you have concerns about in their lifetime? I'm like, you don't think about those times, do you? You don't have any of that experience. So what makes you happy, sad, anxious, mad, angry, all these kind of things is for your time that you're alive. So I'm like, you shouldn't have anxiety about all these big changes because your experience is when you're alive. None of your children or your children's children is ever going to care. It's kind of like, I talk about this sometimes when I'm like, if you have like self-serve, people don't, or younger people don't care if they have to. I had to go to a Walmart the other day. And by the time I walked out of the Walmart, I pushed my fucking cart in the lot and walked away. I was so angry I didn't put it away because I was forced into checking my own shit, or I couldn't get someone to bag my shit. Then I had to check my own shit. I had to put it in the cart, and then they fucking checked me at the door. And then I got outside of the fucking truck. This truthfully, got the truck, and I'm like, I gotta fucking put my car away now. And I'm getting fucking frisked in a store. It was really fucked up, and I'm like, because I'm old. I don't accept that. My daughter thinks that's normal. Doesn't even bother. Just her experience. And I don't think older generations are going to care. They're going to be like, this is my experience. I don't care if I fork off and become a robot, right? Or I want to be an early adopter. That robot, once that robot's got your shit downloaded in them, maybe it's a robot in a copy of your operating system or your download brain. Maybe the robot doesn't give a fuck about you anymore. Maybe you don't care if the robot takes over, right? So like as generations passed, there's no care for what was lost or doesn't exist anymore. It's like, oh, my pearls, humanity be dead. They won't even fucking care. You'll be long gone by that time, and no one's going to care, including whatever that being is. Right, Poke? There's no worries. You don't have to worry about it. That's why we don't need. You guys don't see the future of that stuff. That's why we don't care about climate change anymore. We don't care about animals dying off. She worries about that stuff. I'm like, don't worry about it. They're not going to care. It's like, don't. I'm seriously. I'm like, you can see that people are giving into it. You can see it in culture. You can see it in like, fuck it. We gave up. All the animals are going to die. You'll be eating fucking Soylent Green one day. They won't care. It's true. They don't care about climate change. They don't care about animals or even plants. And I understand that, like the scaling of this as it happens over the next like few hundred years or whatever. We're not heading in that direction. So, hopefully, I brought up to her Dune. I was like, there's a book series. I was like, the movie that you watched, Dune. I was like, that book series is based. I was like, people that have never read the book, they have like a cursory understanding of Dune. I was like, Dune is basically based on this. It's like the fucking droids and the AI started wars, so they got rid of them. Said, fuck it, they're banned. Have you guys read Dune? Well, actually read the book, not the fucking Shamalama Ding Dong movie. It's the plot of Dune. Fuck, you guys don't read anymore. Nobody reads. Yeah, only old fucks have read that book. It's an old man shit. I talked to her about that last night too. Yeah, there's that blood. Look at him. They're gonna fucking try to sell you down in the morning. Doom, baby. Yeah, Pepe literacy. You know what? I never read iRobot, and I always meant to, and I never fucking did. There's a lot of shit I haven't gotten to. You mean Isaac? I'm thinking like word salading his name. Isaac Asimov. Is that who you're talking about? Yeah, I'm trying to catch up right now. Did you hear that they're doing Swan Song into a TV show? Swan Song? That's right. Fork off, baby. Yeah, I'm with you, David. I'm with you, David. They're going to clean this shit up in the nighttime. Overnight session, baby. Overnight cleanups tonight in aisle 666. Hold on. Hold on. What is that, Companion? I haven't read that. Was that a movie or a TV show, The Companion? Pesky. What is that? Is that a book or a TV show? Ooh, it's a movie? What is it called? Companion? At the Weekend? I'll watch that. All right. Oh, yeah, Dennis Quaid's kid. I saw that he's in a movie, right? It was really good? Cool. He's the kid that was in the Supers TV show or something. There's like that super like anti-superhero. The Boys. Yeah. I saw that he had a movie coming out. All right. He's on Red Letter Media too. He does spots on Red Letter Media, I think. Let me ask you guys what you think about the overnight. I gotta check Jedi. I gotta check Jedi Marcus and see if he posted the only come out at night fucking memes yet, because you know he'll know. Nope, I don't see it. Ooh, 6096. 2 hours ago. Yeah. That's fucking dope. I haven't seen Jedi post anything yet. All right. All right. It is now 4 p.m. I don't know if we go down in the overnight, if we clean up some of the mess down below. I have a feeling that we do. I'm assuming that people think we're going to break out here, but if I had to guess, let's take a look. Assuming people are thinking that we're going to break out tonight, let me look at velocity and just take a peek. I disagree. I think we go down. So I think we go down overnight. Maybe not right now, but like in the overnight or in the morning. When you wake up in the morning, I think you see blood. Yeah, the target was hit on Tesla. All right, I'll see you guys tomorrow, 9:30 in the morning. Looks like